Hey everyone, Douglas here, and welcome back to the MMT Macro Trader Live stream for really what is the most exciting, undetermined amount of time and length.
Yeah, that's right.
MMT live stream on the globe, the number one MMT live stream on the globe. You found it, you're watching it. We're going to have a ton of fun tonight. Bijou, I'm stoked for that. I'm amped. I'm ready to go. I had a cup of coffee at about 7 o'clock, so I'm jumping out of my seat a little bit. But I'm pumped, man. I'm pumped. How you doing?
All right. Been an interesting week. Had a little bit of to and fro's here and there, people and coding and reading. Yeah, it's another one of those weeks where I've had quite a lot of different inputs coming into the old brain here. But anyway, I don't know if it'll all come out. Like every week, I've got all these notes, right, and ready to sort of chat and talk about. But I never get to them all. Yes, I always wonder whether they're going to be fresh the next week or not. But anyway, been trying to get the dashboard into put more stuff in there, and we still have more data pulls and things, and so that's all. Yeah, quite a lot happening.
We are building up, I got to tell you.
How about you?
We're building up, and Bijou's been doing a great job on getting this production ready, so it'll be a consistently stable, usable tool, and that is our dashboard.
It's only unstable if I break it. I've been acting too much like a human recently.
What I'm trying to say. Also, welcome everyone. Danger Zone. I already see in the chat, man. Thanks for jumping in early. Yeah. If you have something to send me that's long in length, Twitter would be the way to do it. Charles, welcome. Josh, welcome. Yeah, like I said, I don't know if you can see the tweet earlier, but tonight will be fun. We're gonna dunk on the Monetarists. We're gonna dunk on the Neoclassicals, and most importantly, we're gonna dunk on the Austrians. I got to tell you, Bijou, I'm feeling a little. I was a little hot. I've been a little hot a few times. Not physically warm. I'm saying more pissed, if you will.
Ooh.
Some of the
Twitterati getting at you, trying to sort of gaslight you.
Some of the responses I've been getting, they are just they do. I admit it. I get trapped.
Who's a human now?
I get trapped, and
Douglas,
it is
more robotic about it.
It is. No,
you're right. Just
that's the problem. I'm very well aware that I'm right. That isn't the problem. I know that I'm right. It's that other people don't know that I'm right. I have my monologue diatribe that I'll start when we get up to like 15 viewers. Once we get on, and up to 15 likes too. So hit that like button if you want to hear me go off.
Human urge to not only be right, but have others recognize that you're right. This is why the AI ain't taking over. Like if we program the AI to care about what other people think, it's just going to go, well, that's not efficient. It'll just learn that that's not efficient. No, I'm good being AI, thanks. I don't need any empathy.
Daniel, man, I wish I could give away points right now because you just got 50 MMT points, MMT macro trader points for that one right there. Absolutely, my man. I like it.
Oh, hang on though. Yeah, but after you do your rant, I might do a bit of a rant on the on how it is a recession for a lot of people.
Yeah,
anyway, we'll leave that to later.
Okay. Let me rant. I will rant. I will start my rant when we get.
Let me just say
10 likes. Get 10 likes. Hit the like button.
Good clap for you on Steve Keenan Friends.
Yes. Yeah.
I managed to enjoy the first 2/3 of that.
Okay.
I think there might have been some things that I was objecting to later on in that, but you were really good. And the way, I'm really appreciative that every time you get the chance, you're pointing out that this is stimulating the economy. The Fed's got it backwards. The policymakers have got it backwards. I mean, they want to kind of do the right thing in some ways, but just using unemployment as a cudgel to lower inflation is just so freaking horrible and disgusting.
Yeah.
And it's because they just can't think of any other way. They're very limited minds, and I really do appreciate the way that you point out that this is just the worst possible way to stimulate an economy for the people who can afford to invest and rich get richer effect.
Yep.
So yeah, I do want to point that out, but I might just, if anyone in the chat sort of triggers me or pokes me, I might just go off on that. Right. Back to you, because there's people are really suffering. I mean, I'm suffering.
Yes.
I'm not doing that well. I don't have a lot to invest because I got a lot of student debt, and awful things happened in my life way back. So I lost a lot of savings and things. So it's not looking great for me.
It's not a win. It's not a win for everybody.
I don't have the money to invest to ride the wave.
Yeah.
Anyway, back to you.
Which we will get into. And again, I do like to make that caveat, and we will, I don't know, call it caveat. I mean, it's an appropriate framing of the entire discussion. But like you said, one, we got to get to 10 likes. If you're here and you're not hitting like yet, hit that like button. I mean, we really don't have to get to 10 likes, but whatever. Soft-handedly, I like that name, man. Welcome. I appreciate you joining, and hopefully you can enjoy your time while you're watching live, and drop any questions you might have in the chat. Like Bijou said, I was on the Steve and Friends podcast on Saturday. It was a good time. It was a good time. I thought I was able to really kind of get across some of the main things that that kind of side of the heterodox school might not fully understand. I thought I did as well as I could and succinctly as possible to kind of describe my understanding of interest rates. And I've already had some really good feedback that I felt like was, kind of fair critique feedback, as opposed to, just the trolley crap that happens on Twitter. And so I was appreciative of the feedback that I've heard so far, and the few people have kind of wanted to understand a little bit more where I'm coming at. And listen, I'm absolutely happy to have someone show me some empirical evidence that says otherwise, or good theoretical foundation why I might be kind of interpreting the data incorrectly when it comes to the interest rate things. But at this point, I'm still pretty convinced that we're going to continue to kind of end up in this world where we have inflation stay relatively propped up. We're going to have growth continue to beat expectations, that we're not going to see a contraction out of the banking sector because of the higher interest rates. There's caveats to all of that, obviously, but clearly the Fed has it backwards, and we are absolutely seeing that. So we're at 10 likes now, and I think it's time for me to start my what's grinding. What we're gonna call it, what's grinding Doug's gears today. And this is just what pissed me off. And really the way that I think this entire debate discussion right now about interest rates, where we're at with the economy, at least should be. This is where we should be having this discussion. And I got a tweet, and the guy was I don't think he was saying it the way that I ultimately interpreted it. I think he was giving me he's trying to be charitable, but okay. Listen, I was right. We are seeing a booming economy across the board on every measurement of economic growth, far above what was expected at this time. Right now, does that mean that everyone is winning and that this isn't a terribly regressive boom? No, but across the board, everyone was expecting a recession at this point, right? So at the very least, back in November, back in December, I was calling for at least a financial economy boom at this point, right? That is what is playing out. And that is the point that I think is kind of grinding me a little bit here, is that is where we are at today. The question is, and this is something that I'm willing to admit is still up for debate, is the argument that I made 7 months ago, 8 months ago, that we would be here today. Is that a valid argument? Does it describe what has actually played out in the last 7-8 months, right? Is the interest rate, the higher interest rate regime that we've seen starting in March of 2022 through today, is the higher interest payments that are being made because of the higher interest rate, is what finding its way into the private sector as new net financial assets that is propping this economy up? And my argument is, I don't see any other explanation but that to describe what is playing out. Now, here's the other thing. If I was able to call it back in October, November, December, that this is where we would be at in June, and Austrians, Monetarists, Neoclassicals, if you said we'd be deep in recession with some sort of crisis on our hands at this point. Now, granted, we do have a crisis. It's a regressive crisis. We're punishing the poor so the rich can continue on, having fun, right? But still, if we were going to be in a financial crisis and that was your call and you got it wrong, you have to take account to that. You have to revise whatever framework it is that you're using for analysis, and don't come at me with some what about your epistemological underpinnings? What about those details? Listen, at this point, does it matter? Does it matter what my epistemological underpinnings are for my framework for analysis? At this point, let's do the Blanken science first. Figure out to describe reality and then go back and adjust whatever epistemology we need. If you're going to prioritize epistemology over purely pragmatically describing the reality that is happening first and foremost, then you're not doing any sort of science. You're doing effectively a pure religion.
I know what they mean by that. And I didn't come across that particular form of attack.
That was
saying you've got to have it all sorted idealistically in your head first, and then you can say MMT's got it right.
that is what came up today. Per Byland, I've never heard of him before. He's a professor out at Oklahoma State. That was his response when I pointed out that the Austrian school on their Mises.org website got everything wrong back at the end of 2022, and as someone who likes to keep the receipts, I can transition over to that. But are you? I mean, my simple point was, call me a pragmatist, but I'll look at the forecast he's going on about Austrian economic theory. It's an entity derived from the fact that human action is purposeful behavior, whatever. Call me a pragmatist, but I'm going to look at the forecast, and it's been a bad run for the Austrians, baby. I wouldn't trust them to predict whether or not the sun was going to rise tomorrow. They've got it all backwards, and the response was, are you pragmatist enough to consider whether the theory is suitable for predictions, or just ignore the details such as epistemology? Listen, epistemology is no easy philosophical task, and I don't think anyone has. Even in the philosophical endeavor. But go ahead, Bijou. I'm gonna.
But he's I think that guy's a bit of a weird one. I mean, they're good at arguments and debates because that's their whole.
Rhetoric, pure rhetoric.
Is you getting up a conference and defending their crazy theories.
Yep.
And as Charles or someone in the chat just pointed out, the whole point of economists is to try and help prove to other economists they don't understand economics or something like that, which echoes a lot of what Steve Keen says. It's all just an academia. A lot of it's just fantasy stuff. If you have a really gnarly enough epistemology or model, whatever, then it's just Ptolemaic epicycles. You can model anything and then reverse backwards claim your theory is correct because it fits the data.
Yeah.
Whereas you've just taken some cogs and gears and fitted the data. Whereas, the beginning point of MMT is that, we look at the monetary operations, we describe the real world, and then it's a bit of a struggle to build a theory on top of that because, like Austrians, I think most MMTs recognize that the microeconomics is a really freaking, horrible mess. Really difficult to model.
Yep.
But there are macro layers, top-down layers, driven by policy, driven by all sorts of institutions that are baked in. You just can't get away from. If you ignore those, your epistemology sucks, not ours. It's your epistemology that's wrong because you're just completely ignoring the macro, as Steve Keynes or Warren would point out. These are things that are just so obvious that. It pisses me off, though, when people talk about it, just being accounting identities. MMT's far more than that. Don't ever let that guy, Mike Zicki, get away with that ever again. It's so disgusting because MMT is fundamentally a recognition that the currency is a public monopoly and all of the consequences thereof.
Yeah.
Okay? I got that from Warren. I totally admit I'm stealing it. I'll repeat that till I die. Until we don't have any currency monopoly, and then I'll say, MMT was this theory of currency monopoly in the days when we had currency monopoly.
It was very applicable back then.
It was back then when I was a youngster.
Yeah.
But if you don't recognize that's a huge freaking deal. That's a huge deal. If you don't recognize that, you're going to get a whole lot wrong, and your epistemology is going to suck. What is epistemology? It's how you derive knowledge. I haven't seen any school in economics that does it better than MMT, unless you count the post-Keynesian and Marxists in their particular areas where they, get certain things right because they drill down into those particular areas. But they still don't understand the currency is a public monopoly, or at least most of them don't, and so they get it wrong. I mean, for goodness sake, it took until 2021 for Steve King to admit that Stephanie Kelton was right. He finally admitted it. 2021. He's still on about Dodge's money and all this stuff before then. And I get Henrik on Twitter sort of,
Jesus,
trying to push me into admitting that it's all bank-created money with, Franklin's face on it, all this nonsense. So I try to agree when I can. Yeah. It's most money in circulation's derived from bank credit and all that. But if you ignore the little bit that comes from the government, you actually ignore a hell of a lot, and you don't understand the whole dynamics of the system.
Yep.
But yeah, it's so funny that these professors come on with they're like scolding us for being just pragmatists.
Yeah. Jesus, I
find that all fairly hilarious, but also like I find it incredibly frustrating because they ought to know better. They ought to question their own assumptions a little bit now.
Yeah. I just, anyway. I mean, at this point, if you're doing economics in any capacity and you're not at all worried about accurately forecasting future outcomes, like if that's not something that you're attempting to do, you're not benefiting society at that point. I mean, in any meaningful way, right? Like go do philosophy and at least call yourself a philosopher as opposed to an economist, right? Because then at least we'll know that you're just as full of shit as the next person, right? Who's trying to do philosophy. And I'm not trying to take any. I mean, I love philosophy, right? But I mean,
there's some branch of the multiverse where your theory will work out. Right?
Yeah, exactly. Yeah. Prove it to me that way. Yeah. There's
those debates don't go anywhere. It's like,
there's an
infinite. You're the one that's in the wrong branch. No, you're the one that's in the wrong branch.
You see, Douglas, there is an infinite amount of universes, and we just happen to be in the one where my theory is correct, but the outcome ran adjacent to your theory, and therefore, because you don't have the proper epistemology to understand this deep insight, you don't know what I'm talking about. You know what? This is the world we live in, man, and the world we live in has these sort of stupid headlines from the Austrian think tank. A recession is almost guaranteed now, November 2022. Ooh. Coming economic crisis, November 2022. Recession alarm, October 2022. The housing boom is already over, November 2022. Yeah. What happens?
Oh, wow.
What comes about this week?
They're really putting it out there.
New U.S. home construction surges by most in 3 decades in May. You didn't see it coming because you don't have a framework for analysis that can predict jack squat. All right, I got to go take some. Wow. I got to go take some blood pressure pills now. But
you can find this stuff. They put out all these headlines, and then like a few months later, or they're waiting for the lags, they're waiting for something to kick in that causes the recession, and then it's like they know forget that I wrote that headline. It's next 6 months is going to be a recession. Mm-hmm. It's always ahead, and of course, if they keep predicting a recession, eventually you're going to be right, and then it's like, as I was right. It's like, oh geez, it's just hilarious, but it's tragic because people do listen to the last headline, and so even though you're wrong.
Oh, or,
countless times in the past with your monetarist or Austrian predictions, you're eventually going to be correct, and that's the one that you'll just highlight. So it's like we're fighting. That's why MMT activism is nothing to be laughed at. It's hugely vital because we're in this war. It's a freaking class war, and the poor people are losing. The people who don't deserve, who haven't wrecked the economy, who are just trying to work hard and honest, are losing this war badly. And so activism is hugely vital. Don't diss Grumbine and the others for getting on your back about anything.
I don't, okay. So Steve and I,
God's work.
Steve and I had a quick discussion. First time I ever talked to him today on Twitter. We had a quick discussion. That was not those tweets were no way pointed at me. We're on the same team. We're both in agreement, and we're both in agreement too. What he was referencing.
Well,
What he was referencing is Biden taking a victory lap that he's cut the deficit by 1.6 trillion, as though that's a good thing.
Gosh.
Oh yeah. So
it's so terrible.
Is
but like I say, it's getting to, it's like in the other side of economics, it can get like to Trump levels where you just say something enough, and then you all just believe it, and then it becomes your epistemology because you all just believed it. Yeah, it's pretty terrible stuff. I mean, I'd like to think that I'm happy to ditch MMT, ditch it all if it turns out wrong.
Yeah, exactly.
Okay? Let me just say that.
Yeah.
But that's not going to stop me from being an activist to point out that, if the government has a monopoly on the currency, they can always run full employment. That's for me is a huge freaking issue. It's just massive. Don't waste your resources. Don't have bullshit jobs that waste your resources in a different way. So employ them, but don't employ them in silly ways. And we can all get to this hyper policy area. It's just the people in power who have actual power don't understand it. And if you and I aren't going to have that actual policy making power, and let's admit it, we're probably not, right, ever. But we can at least educate and push, and with activists push for political pressure from, if we have a democracy, it's where it's got to come from. Or if we don't, better work on having a better democracy, because these low-level MMTs and that, there's not enough Stephanie Keltons in the world to go around, unfortunately. So we've got to keep pushing the activism. We cannot go away, because otherwise we're just going to be just benefiting the wealthy. It's not going to benefit all of society. Then you've got old Douglas Rushkoff. I tuned into the Majority Report episode where he was on, and I really quite enjoyed that. So I got out his book, The Survival of the Richest, and oh boy, it's insane. I'll give you an electronic copy if you're interested, but I know Douglas, right? Douglas is like mad busy with all this stuff, so he doesn't have time to dig into the political economy and the philosophy and the activist side of things. So I can kind of do that sort of stuff. But I do recommend having a look at anyone in the chat. Like have a quick look at Douglas Rushkoff's work, Survival of the Richest. It's insane, and it's hilarious, but it's also very, very tragic. You should see what the rich are doing and trying to compound themselves and to build bunkers to try and isolate themselves from society. And then they come along to this sort of leftist, sort of Marxist guy, Rushkoff, who's a professor who looks at media studies and things like this. And they asking him, like, so what can we do to avoid, the zombie hordes from outside, coming in and trying to grab our stuff? And, what happens when our security guards turn on us? What can we do to stop that? They've got all these, panic, all this fear and panic about what'll happen when all the food runs out, because they believe these guys believe is in climate heating and ecological catastrophe, and they're trying to protect themselves from it. So, and they're trying to protect themselves from society. And it's like, to me, like to someone who thinks like me, probably a lot of people is like, you can't escape from that. They're not going to be able to do it. It's a fantasy world. So then you've got the Silicon Valley bros who just want to escape all of that by uploading themselves into Silicon, which is a whole other story too. But anyway, it's pretty good stuff to read.
Well, damn, Bijou, you just explained me, man. Now I'm feeling bad.
Yeah.
Now I'm feeling bad.
I'm not going to Silicon shame you. I know. I've got my little cubicle here that I'll be happy to share with you. No, I mean, I don't know what to say about all that. It's just, it's a weird experience reading it all and to having that sort of insight into the life of the very ultra wealthy who is so insulated from society. They just so lost touch with, it's like the dumb waiter effect. You used to have a back in the day, Thomas Jefferson or whoever it was, had this dumb waiter, this tray that would lift up like an elevator, so his guests wouldn't see the servants, and their sort of smudgy hands and that getting in the way. Yeah. And so it's like that. It's that kind of effect. It's like you just deliberately trying to push away all of the workers, everyone who toils away to try and make good things. And so they're living in this bubble where they think, oh yeah, no, I get good things. I get my smartphone, I get my computers and all that. And, there's no harm in where that's being produced. There's no toxic chemicals, spilled on workers that are trying to clean the smudges off the cell phones before they get put in the plastic packages. Blah 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 blah. So it's just, I don't know. I just really think the activists have a lot to do, because they've got to overcome all that power, all that money that's been put into these sort of ventures, and I don't know. I really sometimes despair, but I think there's still more of us than there are of them. So I think there's still hope and cause for optimism, and you probably find me being more optimistic than not, I would say, still now, at least for now. But anyway, that was half the rant that I wanted to go on, but I've still got more to come.
Good.
It's like I don't think we can let up on the activism. I think we've got to just go full bore on it. There's certain things I would say. Okay, I can tick off one of my notes now. There's certain things I reckon that an MMT has a lens where they can actually say we can be accelerationist in this narrow particular area, and by that I mean you push something forward to the extreme. Now, actual accelerationism, I'm not really in for it, because it just involves a whole lot of mass death. Right? That's just pushing capitalism to the limit, which is what some old, I don't know if you're aware of this, all Douglas, but this is just for you and the people in the chat who maybe haven't come across this. Have you come across accelerationism before?
I've not heard of this. No.
No. Okay. So back in the day, there was some socialists and Marxists and that who were pretty extreme. Plus maybe, I don't know, a few libertarians and all that, the sort of hippie types that saw a sort of a tech utopia and then saw it all crumble when neoliberalism came along, and the trajectory that they thought Marxism or libertarianism or whatever mix they had was going. They saw it was not going to get there, so they were like, well, let's change theory. Let's just be full on capitalists. Let's just push capitalism to the utter limit, and that's why they call it accelerationism. I mean, I'm stuffing it up a little bit here just because I don't have the time to go into it in depth. I mean, obviously, I'm not going to get the full story correct, but that's the sort of rough general picture of it. But it's a terrible idea, right? So just push. It's basically Darwinism. It's like you just push things to the limit with capitalism, wreck the planet, just whatever happens. You just, and then you get a collapse, and then you get something like,
yeah.
Their communism or their Marxism or their anarchic society or whatever they want. There's a whole range of opinions, from the anarchists, to the communists in their spectrum all the way in between. But that's what they sort of want. They sort of don't want capitalism. They recognize it's an unfair system. It's grossly unjust. But the way to get rid of it is to accelerate it. It's like very theoretical, very philosophical. You can work it all out. You can map it all out in your head, right? And you can game it out or whatever you want. It's like these gamer bros, these
I can gamer bros
the sort of appeal if you're a real, if you live in that sort of highly philosophical world where you can just ignore a whole lot of real world complexities and actual society. But anyway, it's a theory. It's a philosophical project. It's not a sort of concerted effort. But there are some true believers, I guess, in it. But anyway, my point is that I think you can use that sort of idea in smaller ways. You can look at things that you can really accelerate in a good sense. Really push them forward. So I don't know. I could come up with lists of ideas about that, but I sort of don't have them right in my head right now. But there are things that won't harm people, but if you accelerate them, just show the complete foolishness of things. And I don't know, maybe hiking interest rates is a bit of a story about that. You look at Argentina and check out Warren Mosler's MMT podcast episode just recently released. Sort of a little bit like that. It's a little bit like they're going full bore rate hikes, full bore inflation. It's like, nothing really bad is happening. I guess it's a kind of a good bad version of accelerationism, because in a sense, their economy is really strong because it's so hot, but the way they're causing the inflation is still pretty terrible, right? So it's got some bad effects too. So they may be seeing a little bit of that. So, but that's also, I mean, to your points, it's playing out the same. If you had that situation in the USA, probably would be politically intolerable. But somehow in Argentina, and Turkey, they keep getting elected. So I don't know what's going on there, right? But somehow they managed to make high inflation not a political problem, which is...
You don't think it's a political problem to them?
I know. I've always been an inflation hawk, right? So I'm always thinking, right?
No, I'm saying to the citizens of Argentina, you don't think inflation is...
Oh, yeah. No, I think it is. But
okay.
But I mean, it's still, they got full employment, so the real resources are being produced.
Yeah.
So
wait, they don't have.
Right?
Hold on, they don't have full employment, do they?
Oh, okay. No, they don't have full employment. Sorry, misspoke. Yeah. They have, but they have good employment. They have, people working.
Yeah.
Well, okay, maybe I shouldn't say that because I haven't looked at the numbers, but it hasn't collapsed. So the real wage is still, doing okay. So they got high nominal inflation, but the real wage is okay. The peso is like trash, but it's like they're almost using US dollars in some ways in a version of trickle down.
Yep.
So it's sort of like mirroring the USA, but also with the peso. It's a sort of quasi currency that's there that just gets swapped for US dollars as quick as you can. But that's a sort of weird type of accelerationism going on there. Who knows how it plays out? But similar dynamic in Turkey, where it's very interesting because they've managed to get political tolerance for high inflation, and it seems to be because the constituency that for employment, for jobs is being satisfied, and so they're managing to just do it. It's a weird situation though, because it's not really an MMT analysis at all. It's just political games to try and stay in power. Anyway, we'll see how that goes. Who knows? Probably, it's just a political power thing. So it's not a good way to do it. But it's not a bad idea to have quite a bit of high inflation as long as you do it in the right way. And so, but doing it with the interest rates ain't a really good way, if you ask me, or if you ask Warren or anyone else like that.
It's the worst way you can do it.
It's just the worst way to do it. Yeah. Just feed the rich.
And then also, well, I mean, that's the other thing too. I mean, we need some better definitions. We need some better words than inflation. We need better, not definitions. We need better words than inflation. We need multiple words to describe inflation.
Agreed.
There's the inflation that we all know that we don't want. Right.
That's right.
And we all get what we mean by that. But I know when someone says inflation, my mind goes instantly to kind of an MMT definition of how we would define inflation, which would be the continual increase of forward prices. Whereas I wouldn't consider, if all of a sudden the government just decided to add 3 extra zeros to everyone's balance sheet, right? I'm not going to call that inflation. Would that have dramatic effects over 6 months? Yes. Would the entire price level of everything adjust over the next 6 months to a year? Yes. Would that be inflationary in the way that I would mean inflationary? No. But yet we would call both of those inflation. Yes. Right?
That's
right. We would call both instances inflation. Yeah, you get what I'm saying.
Yeah, we're the linguists on this. Yeah, Michael de Souza Cruz is pretty good on the metaphors and language framing too. But I think that's another really big part of MMT that's often ignored. Often ignored is the language framing, and we haven't won that battle yet, as far as you can call it a battle. Mm-hmm. But getting better definitions, getting better language surrounding economics, is not something that just academic professors should care about. It's everyone, because it's on your news It's in every TV show you watch. It's in every movie. Is all the bad language framing, and but it's just considered common knowledge that that's how it works. You know, that the taxpayer is paying for everything. So, I mean, and even in the academic circles, it's so hard to change language framing. And Twitter's definitely not the way to do it. I mean, I've tried with Enrique and these others, but they just don't want to understand that the currency comes from the government and that the banks are the agents of the government. And there's no way convincing them. They just don't want to understand. So I have to sort of move on and try and bait some others into engagement who actually prepared to learn.
We have a few people dropping in chat that I want to say hi to. Shad, welcome back, man. Thanks for dropping in. Danger Zone. Eugenio, welcome. If you've been here, I don't know if I've seen you yet, but welcome. And thanks for dropping in. Monique, how's it going? We will be discussing markets momentarily. Don't worry. I have some fun market stuff to share, some things we've been working on, a little under the hood look at some of the MMT macro trader Patreon stuff that they're getting. We've been crushing it over there. It has been just listen, some of the tools we built have been very helpful. And like the last 4 to 6 weeks have just been perfect, like laser accuracy in terms of where we are at. And I'll show you kind of some of the stuff that we're doing there. But I know it's recency bias, but damn, it's been feeling good. We've been having some fun. The tools that we're building are awesome. I'll show those off in a little while. But Bijou, before we do that, you don't know what I'm about to do. I'm gonna put you on the spot.
You're right.
Yes.
I do not. No idea.
Oh man, the best shows are always the one where we show up 5 minutes before. Exactly. The ones where we show up at 30 minutes before we go live. Well, do you want to talk about something? I mean, I do, but I don't have time to explain it all to you. So
some weeks I just don't get a chance to do a quick pre-show thing with Douglas.
Yeah,
so it can be a bit seat of the pants.
I've also been hounding him to get a lot of stuff done with some of the stuff that we want to share. God, no, you know what? We're gonna do that now. Bijou, you're off the hook. You're off the hook because I do want to share this.
Am I?
You're off the hook for now. I'm gonna come back.
Yep.
But the first thing that I want to show is some of the stuff you've been working on and kind of explain what we're putting together, get the hype train going. These are tools that are, to a certain extent, already available, especially if you're an active trader.
Wait,
what?
Hang on a minute, just there.
What?
I got a butt in. Yeah. I mean, you're on a great roll there. I want to do some anti-promoting. Don't grow too fast. That's what kills.
Oh no, we're ready.
I want to grow too fast.
We're ready.
You're amazing at the marketing.
We're ready.
To do some anti-marketing too at the same time.
We're ready. Listen, you want to listen. I mean, at some point, this is going to become so valuable that I'm going to have to jack the price up. Like I'm going to have to. So if you're an investor or trader, you want to get in at the ground level before I realize that what we're doing over here is just too valuable. Patreon.com/MMT macro trader. That is where you can get on at the ground level before it's too late. But I do want to share some of the things, and I'll get back to joking aside. I do want to share some of the things that listen, if we get too big, I will remember who the OG people were. We'll set up a little Discord server, something like that, right. And we can keep that discussion going there.
Great.
Remember. Oh, I'm already showing it. I didn't even realize I switched over. All right. Bijou's been working hard at the dashboard. We're getting all the tools that I use for market analysis on the dashboard. Slowly but surely, we're getting this up. We're going to publish this. We're doing it the right way, building it so, kind of from the ground up, from scratch, so it can run the way we want it to. Forgive some of the visuals right now. We're going to continue to make this look better, but it has all the tools that we're going to want on it. What I'm eager to do, this is what I want to share, and this is why I wanted to switch this, is some of the tools that I'm going to share and some of the tools that I do use. I want to get in the hands of everyone the core macro kind kind of fiscal data. That is something that Bijou and I kind of have agreed on, that, look, the tools for traders are going to be the tools for traders, and the stuff that really kind of gives you an edge in the market that I've developed over the years. I'm going to ask you to support me and kind of get my cut in that. But what I do want to do is, maybe a better way to put it, no one should just be paying for raw data, right? I mean, you shouldn't be asked to pay for raw data. That's nothing I want to ask for. So one of the things we're going to do with this dashboard is, and I'll tell you why in just a second, but we're going to make kind of the core MMT data set absolutely free. Whoops. And the reason that we're going to do that is because a fellow MMTer is just unwilling to acknowledge that we exist, and it's just pissing me off. It just every time I hear it kind of, and as you guys can see, I like to keep receipts, and I can be a bit vindictive, and it's pissing me off. So all the core daily fiscal flow stuff. Yeah.
In here.
Yeah.
These alpha males,
No, I am being generous here. I'm being very generous here. I'm being a man of the people. It's really ticking me off. There are a lot of people out there now that are doing applied MMT analysis from various angles. And there is not, you have the other person open in a tab. Yeah, I like his work, man. I have nothing against him. I think he's very smart. I think we all owe this person a debt of gratitude for starting this whole train of thought after Mosler. But he's not the only one, and by all means, he probably has some insights that I don't have, but he's not the only one. There are those of us who are out there who are also doing this. Applied MMT, A&G traders. I mean, I can think of, well, I think that's about it, to be quite honest. But if you are that and you want to shout out, I'm willing to shout you out. I mean, I think we're all doing good things to not only...
I want to push Douglas to be the one that does it more for the people too. Right? So we're going to put out as much free stuff as we want. It's more the stuff that's a bit like generally applicable and helps people with their modeling that I want to get out.
Exactly.
Stuff that's really useful.
Yeah, if it's going to help you see the macroeconomy, help you understand why things are happening the way that they are, and you're just kind of a market watcher, you're just an economic observer who's trying to make informed decisions about how you're going to vote for economic policy, how you're going to advocate to your friends, to your families, for what American, what New Zealand, what Australian, what Canadian policy should be, then we want to help you do that. And we want to help you do that in an intelligent way. And that is, I'm not, obviously I want to work hard. I want to make a product that other traders, investors can use, but I also want to make sure that that this information gets out there in a way that can be applicable even to people who that has no interest in investing, but they have a very deep interest in making sure that their communities are able to thrive and be prosperous. And I mean, what good of a world is this if Bijou and I can become prosperous, but no one else is? So that's important to us. Anyway.
Yeah, within planetary boundaries too. So, that's why it's good to have this crossover with the Steve Keynes and Friends podcast and that.
Yeah,
because it's respecting planetary boundaries as well. So it's no good having growth that's unsustainable. And so other people will be doing that too.
Which, to be clear, I am okay having growth over at patreon.com/MMT macro trader that is unsustainable. Yeah. You set me up there, man.
As long as our chat doesn't get too wild and stream so pretty fast that I can't read it. No, I don't want too many people jumping in here. And shitification is a thing, With
that being said, I'm not taking shots. I mean, I kind of am, but the other person, he's like
that guy who trolls you on Twitter. It's like, this is pseudoscience.
Yeah,
it's like, his little pointy metal things that go into a wooden target that are supposed to, it's pseudo killing. What he's up to with his guns. Anyway, that was funny. Anyway,
we have a lot coming out very, very soon. I'm already kind of using this in the twice weekly updates over there. We've got all the data. Some of the other things too, Bijou, that I kind of want to tell you right now that I'd like to add. I mean, we have all the H.8 data. What I'd like to do is maybe add some overlay with the H.8 data to show maybe the mutual information, or just some, show some kind of correlation. I think that'd be kind of cool to let people know, what is affecting what. How to measure that. A lot of the other tools that I like to use as well, the DixGex stuff. Actually, if you're an active trader, active investor, I have a video that I just got to hit record on, all about the dark pool index. I'm going to go into that. I've done some pretty neat research on how to use, if you're unfamiliar with the dark pool index, it's squeezemetrics.com/DIX. Some really cool research on how to kind of apply that and where to look for opportunities with that. Here's one of the cool things that I use every single day. This is the gamma exposure tab that we have on the dashboard. And again, especially if you're kind of a short-term swing trader type and you're looking for certain levels, man, you pair this with the Bayes predictive model, and then my first deep learning, the first model in the deep learning deep MMT series, the S&P fair value model. This pair together has been what has absolutely been crushing it, right? So the deep MMT S&P fair value model, this model predicts, given the flows across the macro landscape that we capture and essentially feed into the deep learning model in kind of an MMT structured way. It's effectively predicting, forecasting what the value of the S&P should be right now, given those flows. And amazingly, despite the absolute liftoff we've had over the last couple of weeks, it's still saying, given those flows, we're underpriced at this point. So how we've been using this is as we kind of head into, as we've been heading into OPEX. OPEX happened last Friday. I don't want to bore you with the details here, but on OPEX, it's oftentimes an opportunity for volatility to kind of creep in. We've seen some volatility creep in, so we're on a bit of a reset. But heading into OPEX, what you see when you do these kind of gamma charts, you see these large buildups of gamma exposure above where price is currently at, or you can use the gamma exposure profile and see where it peaks out. Oftentimes, that is where you're going to see price pull to that price point. Especially this is how it plays out, at least in a bullish market where the structural flows are supporting price. It's going to pull to that price point and then pin at that price point, and then oftentimes that becomes a rejection point. Price will push lower at that point and ultimately find support at the gamma flip zones. That's where we're looking for support at right now, right around 43.40. Where we should find support. Of course, if that gives way, maybe Powell comes out, says something stupid, and we see a bunch of hedging activity take markets lower. Then we wait for that to reassess, but we also see that like 4,200 might end up being a support. So that's how we use that. But of course, we can address and understand the structural flows by using the deep learning models, by using the predictive Bayes models to understand where those flows are actually coming from. Anyway. That is kind of what we're doing over there. I'm excited to get that out of the hands of everybody, and then to kind of just give you my market outlook right now. I know this came up in the chat just a minute ago. I do think this is a bit of a buying opportunity. I still think we're going to have another leg higher, very akin to what we saw as we've been pushing through here at the end of May into June. And again, I mean, I think this is just a 1-2 punch that's an absolute winner. And the next thing too is I've got some deep MMT models that are like cooking right now in the oven. I've been working hard. I can't wait to share them. I think the first one I'm going to share is actually a GDP predictor. I was able to get it to learn, but I want to make sure it's right, and it's something that I'll make public on my GitHub when it's finally ready to kind of show how we can use this sort of stuff to get it's learning. Let's put it that way. I mean, that's all I care about. It's learning. I think I can get the model a little bit better, but we're coming along. We got some good tools. I'm also seeing some stuff in chat that I want to read over. So Bijou, take it away for 30 seconds to a minute here while I kind of read chat, because I'm seeing some people talk about Jem Carson, and I have some opinions on him. I really like a lot of his takes. I mean, I think he's a knowledgeable guy, but we can get into that discussion. Let me read chat though, and
yeah, okay. And, so yeah, you can read the chat, but you might have to go over all that again in plain English for the rest of us. Like Eugenio and me. I know Mr. Zero Shot there seems to have some interesting questions, so hopefully Douglas can have a read of those.
Real quick, Shot, what is he not a big believer in? Tell me what Kem's not a big believer in. I'm just not understanding this. Maybe I got to go further back in chat.
Okay.
Chat. But go ahead. Go ahead.
Analysis of the GEX. I got to be careful about talking about all that stuff. I'll just get some GEX on my face if I start talking too much about that. But trueflation. I haven't heard about trueflation or any of that sort of analysis. So it looks like, if Douglas hasn't heard of that, they have to somehow. So it's a bit hard to get that sort of stuff done in the chat. So you might want to talk to Douglas offline. I think Zero Shot there. Are you from Activision Finance? Yeah. Better to talk to Douglas off the chat about those more technical details.
No. This is good. No, this is good for chat. Actually, this is good. This is good. Yeah.
Cool.
Shot, and this is good too, because Shot, I can tell you're very well studied, very well thought out, and very much in the vein of doing kind of similar modeling to what I've been doing. So I'm happy to have this discussion. What Shot is trying to say, and to a certain extent I'm in agreement with, is that a lot of the stuff that's being sold out there, the GEX products, the Gamma products, they're really, so what ends up happening is in the market there are buy side guys and sell side guys, right? And the sell side guys, they're good salesmen, right? And then they get into this, like, you need these volatility products to hedge and that sort of thing. This is what this Chem guy is, or Gem guy is on Twitter. He's very popular, and they sound cool, right? They understand and they can kind of predict short-term kind of big swings on occasion. I don't think that's all that statistically viable long-term, but it sounds cool. Right. And to a certain extent, I think I agree with what Shot is trying to say, that what they're doing is really selling complicated statistics that help you understand pricing, not predictive understanding of from like a macro standpoint. And it bears out that there's a handful of big name people out there. I can tell you like three of the big name guys. Two of them I just won't mention. It's not worth getting into. One of them is no longer allowed in the industry because he's just that much of a scumball to a certain segment of the population. So he got kicked out of the industry. The next blew up his hedge fund in 6 months and wouldn't pay his employees who were working for him. And so that's one of the bigger names. And then Chem or Gem, his active, or his someone got a hold of one of his the word is escaping me right now, but one of his info sheets, and he's down 20-30% this year, or whatever, from wherever it started. It could be off by a little bit in terms of that, but I agree that a lot of what's being pushed out there is from these sell side guys, and it is not applicable to traders. Or it's not that it's not applicable, but a lot of people are trading macro or trading trends or that sort of thing, and the stuff that they are selling is just has no bearing because they don't have a macro framework that actually makes sense. Shot, I kind of agree, but I'll tell you, in conjunction with I think tools that can accurately predict where the true underlying structural flows are at, I think all of a sudden you see the tools, and there's only two. The only tools that I'm having Bijou add to the dashboard are tools that have given me any value. I'm not going to stuff this thing with various tools that I know add no value. It's only going to be the ones that add value to me. So I could put 50, 100 different things on here. It's only going to be the stuff that matters to allow you to make a decision. But the first and foremost are what direction are the structural flows heading. We know how to measure this. We know how to determine this empirically, because we can go test the data that's out there and see if it matches up with the theoretical framework that MMT applies, or that MMT provides. And then from there, we can measure this, understand what the outcome is given these flows, and then make certain predictions into the future, and just really at the end of the day position ourselves to kind of take advantage of that. So that's kind of my thought on that.
That was great.
I know
you got a lot more. You got a lot more knowledge of those insiders than I do, of course. But obviously, but that's still impressive. I
I will say too, if anyone has any questions after you're watching this back, I know maybe a lot of live people that tune in and stick around for the live stream are a little bit more into kind of the kind of broader MMT topics. But let me know in the comment section below. I can definitely elaborate more if any of that needs some
Zero shots naming more names. Someone Hussman now.
I think I know who he's talking about. So I'm gonna.
He does know.
Yeah, Bijou. I'm gonna let you get a word in.
You've been at this game for a while, right? I'm gonna know all these names, personalities. It's pretty funny to me. Going all over my head.
Okay, maybe I don't know. Oh, I definitely heard his name, but his stuff isn't coming up on my thread all that often. So.
Yeah, it's tricky. It's tricky with these influences and so forth because they can always hide their own personal situation, and they're often living off donors or Patreons or whatever, and so they're not actually, they might not be actually making money themselves. You never know. I mean, well, how would you know? And they're not going to tell you. So
God, the perma bears, shot.
This whole industry of finance influences and that. I mean, obviously, some of them do get big and have become wildly wealthy, but a lot of it's luck and a lot of it's inside knowledge. As the Norminator would say, he's the only other guy.
He's the only one of a handful of us that are doing this.
What else? I don't have anything else to talk about on that particular topic, but if you want to go off on any other
tangents, I think it's time.
Traders out there or influencers or whatever.
I think it's time.
How do you know? The question I would ask you is like, how do you know? How do I know Douglas is good guy to work with? Because I know him personally, right?
You don't, Bijou.
Yeah. So I mean,
it's hard. Go ahead, keep going.
Well, no, I just worry because there's a lot of people who just get a bit gullible and they get a bit of a taste of it. Maybe they get lucky in one trade or two, and then talking about the Bitcoiners and cryptocurrency trading stuff. That's a whole other story. I mean, total casino. So they're riding a wave. It's not like a what is it? Blackjack or what are the games you play at the casino? Roulette. It's not like that. It's not like a one-off thing because you're riding this wave upwards in crypto and other areas. So you're riding a wave. You can find, you make good return. You're making really good bank, and you don't see the crash ahead. It's just all Ponzi, and so I really worry about people who are getting into that. I'll tell you in a little anecdote. You might find that you get people coming in on encrypted social media, well, not social media, but the messaging apps like Viber or WhatsApp or what are the others? Those sort of private messaging apps. You might find you get a crypto person coming on, and it's quite funny because I actually tried to string one of them along a little bit just to see how it sort of works. So it's usually, for me, being in New Zealand, it's a Filipino, usually someone like that, and they're moving to Australia or New Zealand, and they'll probably just randomly guess your number and send you a message, and it's something like what is it like? Hi Jack, are we about to meet this or that or whatever? Just a sort of quick message about meeting Jack or whoever.
Oh yeah,
David from the office or whatever.
Yeah.
And it's like, oh, sorry, you got the wrong number. And it's like, oh yeah. And then they almost instantly ignore the idea, the whole idea that they got the wrong number. And it's like, oh, do you want to meet for a coffee or something? Or, and eventually it really quickly gets into some sort of trading, usually Bitcoin or crypto or something like that. So I had one of these on and I was stringing them along for a long time. It was quite hilarious. And every time they asked, do you want to come and trade with me? I was like, I was trying to explain from why this stuff isn't money and all this.
I love it.
It was really pissing. It was really getting them annoyed. But it got so bad. It's got so interesting that at one stage I thought, oh, this is actually probably a real person. Couldn't quite figure out whether it was a sort of this person, one of these scammers at the desk or an actual real person, because they really were committed to trying to get me in. Because I was deliberately trying to just keep
That's a fun. Yeah, that's always fun. That's always fun. Every once in a while, if I get one of those phone calls in, I'll bring the family around and put them on speakerphone and have some fun with them.
Yeah, but I'm just wondering, because there's a lot of naive people out there who probably could get taken.
Oh, it works. If you ever watch, I mean, there's Kit, guys, chat, you'll know Kit Doba, and then Mike Browning. Is that his other name? There's a few guys. One's a Twitch streamer, one's a YouTuber. One of the YouTuber guys actually has been able to break in a few times to the closed circuit television stuff because they have it connected to the internet. So, the big boss offsite can watch them. And I mean, these things are just massive call centers. Right. And he's been able to get, real time CC. Kit Boga, that's right. Yeah, they've been able to get real-time CCTV access, and I mean, they watch these things play out, and they work. I mean, they work. The one video, I mean, they had like $50,000 and up on the board that they were, they collected in the day, and they were handing out the bonuses. So it works. It works. Going back though, do I think that some of these people are scams? I mean, I think they think they're offering products that can actually help people in terms of like the market people. I mean, I really do. But I also think they could be a little bit more transparent about the real efficacy, I don't want to say efficacy, but the real quality of what it is. Let's get into it. Teach the crew about Vanna and Charm. Yeah. Which like
what are they?
So listen, I mean, it's okay. It's undeniable that the hedging flows that are taking place move markets, and a lot of the dynamics that you see short run are caused because of these hedging dynamics, right? Massive positions are opened up by dealer positioning to hedge against options positions and other positions, right? I mean, there's just a lot of flows that are just purely because of dealers hedging. Mm-hmm. No doubt about that. When it comes to the options, as the options begin to hit expiration, option eventually expires. When option begins to hit expiration, there are certain actions that dealers have to start taking to readjust their exposure to the options, right? To readjust their hedging exposure to the options that are on their books. And Vanna and Charm are two of the Vanna is a time. Charm is the time. I'm getting them mixed up off the top of my head right now. But they both good night. I have a special guest that is telling me good night right now. Good night. To remain delta neutral. In other words, when you're a dealer, you don't care about the direction. You don't want to care. I'm sorry. You might care about the direction. Right. You don't want to care about the direction of the markets. Yeah. You want to remain what's called delta neutral. So you're attempting to, as the time decay happens on those options, and as eventually as they're going to expire, you're getting a different look at how the change in markets are going to impact those options, and so you're hedging this. So hedging flows do impact markets, and here's where I wish a lot of the people who are kind of selling these products would be very clear about, is in terms of understanding like some sort of statistical distribution to find some sort of alpha edge in this. It's just very little. I mean, it is very little. I mean, it's essentially like selling a book, on beating Vegas, right? Where the vast majority of it is just, it's it's unbeatable. And the few edges you have to put in a tremendous amount of yes. Vanna is the change in volatility. Yep, Vanna is the change in volatility. Charm is the delta change over time. So there we go. Thank you, man. I appreciate it. I appreciate you coming in and saving me on that one. And so like could you learn to be a card counter and maybe beat blackjack before before the casino catches on and that sort of stuff, and no longer allows you to play? Yeah, maybe you could. The edge there is very little. You're gonna have to put in a ton of effort, and it's just not for everybody, and it's not going to be applicable for beating all of Vegas, right? And that's kind of how these guys sell this stuff. and they don't sell it with the major caveats that it's normally just not applicable, and you still have to understand where the structural flows are going. And that's the big thing that kind of bothers me. None of these guys understand macroeconomics from any meaningful way. I mean, they understand the jargon, they understand the world that it happens in, but none of these big name guys understand macroeconomics in any sort of applicable way that you can take advantage of. So that's kind of my take. I wish a lot of these people would be more clear. Like, look, a lot of this stuff is not going to be applicable to your trading. I'm hyping it up more than actual. And I'm very, very clear too that I am not an action trader guy, right? I'm not making trades every day. I've been in the same position since December. I have held that long. That is how little action. Because it's just the right thing. I mean, we were way underpriced in December, and the right thing to do is get leveraged long. That's what you do when you're that underpriced, and that's what I did, and now it's paying off. But I'm not Mr. Action, but I do know where markets are headed better than most, and it's definitely been playing out.
Is it fair to say, though, that I don't know what you'd call your strategy, if there's a name for it, conservative maybe, but it's just macro. You can't really have a macro strategy unless you're like you or the only other one on the YouTube, the Nominator. You actually understand the macro. So, yeah, it's like it doesn't surprise me that they wouldn't really have a sort of macro trading strategy because they don't really understand the macro. If they did, it'd probably be ballsing it up quite a bit.
They do have a macro strategy. I mean, Jem in particular will talk his macro strategy. I've never listened to him talk macro. I mean, to his credit, he's been calling for inflation to kind of keep on longer than most people anticipated, and so he's certainly figured that out. And but he's not in any way understanding what he'll reference structural flows, but I don't think he understands where they're coming from and why they're operating. Speaking of macro strategy, I got a dog on one of the people that you love. I almost tweeted this out. He sounded like an idiot. He sounded like incompetent. I wouldn't give this guy a dime of my money to manage. And that is your favorite guy, Nassim Taleb. Whoa, he had a CNBC segment. It was terrible. I mean,
oh god.
I was.
I think he gets a lot of it just reversed totally backwards. No, I like his statistics is great to read, but his macros, I've noticed is pretty awful. I can't even read it. It's just I don't want to have my respect for his use of statistics and analysis about tail risks and all that sort of thing. I don't want to kind of have that lessened. he's also kind of a funny guy, but oh yeah, I can't. It's too cringe. I look on his things.
I'll switch
talking
over
about macro.
Yeah,
and I just can't read it. It's like, oh no.
This was it. It was just so terrible. I mean, he still thinks we're going to have a recession. I mean, the whole bit.
It gets government debt all backwards.
I mean, it was just everything. I mean, there was nothing. There's nothing original about it. What I was going to tweet out is something to the effect of, Taleb might be the statistics end boss, but when it comes to macro, this guy is like level 1, man. It was not good. So look it up on Twitter. I mean, I'm not going to play it, but
I do give him a little bit of love though, for at least for Bitcoin, because he reversed himself on Bitcoin.
Yeah,
which is good. But he's an interesting character. One of those people who knows a lot, and sometimes that's a dangerous thing. He's so brainy, right? But when you get it wrong, when you're really that brainy, and he's got this weird thing where he's like also can come across as humble, but he's like one of those guys who but you got to beat your chest, you got to be aggressive about life and take the bull by the horns and all that sort of thing. And so when they get it wrong, they get it so wrong, it's embarrassing.
I forget all of his. I mean, I forget all of his points, but I mean, they were all just your classic kind of monetarist talking points.
Classic monetarist,
it was
weird thing though, because he respects Marx and Keynes, but I guess that's where you see MMT is not just old past knowledge and all that. It's a synthesis, right? MMT is a synthesis. People forget that. It's like Yeah, okay, it borrowed from Minsky, it borrowed from Knapp and Marx and Keynes and all the guys have borrowed a bit here and there and then put it all together. And then Mosler came along and told them about central banking. Great synthesis, but it's a synthesis that really matters. It's a huge freaking deal. It's like you can't take all these little bits of knowledge and stick them together, especially when some of them are incompatible. And then, and what you did really well on Steve Keen's and Friends, by the way, is pointing out that no one gets floating exchange rates except the MMTs. Put them all together. And if you still have fixed exchange rate thinking, you're just going to get it all wrong.
Yep.
You're going to get it totally wrong.
Yep.
And so MMT is not just accounting and that. It's far more important that people understand it. And, it's like, okay, I agree with everyone. MMT is a bad name. We shouldn't be called MMT, And I'm with Bill Mitchell on the language framing. We should, choose good names because they matter. It turns out that actual linguistics actually matters quite a bit. For, to avoid false consciousness and things like that.
Yeah.
And so really, I did appreciate when Mitchell and them and Randy Ray came out with a book and just called it macroeconomics. It was basically MMT.
Yeah.
They just called it macroeconomics because that's what it is.
Yeah.
And so these are hugely important things. And if you get it wrong, you can get it really wrong. And so all these brain nerds, all these brainy folks out there, I do respect their intelligence, right? Immensely. And they're brainier than me. I mean, not maybe in quantum mechanics, but certainly in certain areas of statistics and finance and pricing theory and all that sort of stuff. But when they come in wade into macro and they're still thinking about fixed exchange rates or like that money is gold or whatever, then it's like Bill Mitchell says again, like I've almost got a head start on them, even though I've only been doing this for a few years.
Oh yeah,
or 10 years. But in terms of the macro picture, it's like I'm at their PhD level already. Just because it's because I've studied MMT, and I understand how the system works in that sense. And all the rest of the stuff, all the pricing theory is relative pricing. It's like I don't even want to touch that. It's like it's sort of that nasty analysis stuff. And I'm sure that they're really good experts on that. So if you grant them all their assumptions are correct, right? Grant them that, and that's how the world works. Then I'm sure they're really they'd be really useful in that branch of the multiverse, but not in our branch. For those matters, like they can be really intelligent in certain areas, but just when they get it wrong, they can get it really wrong. It's kind of sad to see. But anyway, it's good to have. It's good that you called them out like that.
I never did.
I wouldn't even be able to watch that kind of segment. I'd be like, Well,
everyone. I mean, I've never spent too much time with his work. I get the gist of it. It makes sense.
Right.
And I don't deny some of his statistical stuff. But I thought I'd listen to the macro stuff because I love that, and it was a bit cringe. But I thought about I just didn't really want to get into it with him quite yet on Twitter if you were to see it. But I'll tell you what, if 6 months from now he's still calling into a recession, whatever. It doesn't matter. Fixed exchange, floating exchange, that's where it all begins. I mean, you are going to end up on a trajectory to another planet to another world if you start with, you start in the wrong direction. And obviously we see that play out. I think Shot was saying goodnight to Soph, but maybe Shot's leaving himself.
Okay.
If you are Shot, then have a good evening.
Whatever then.
All right, Bijou. Yeah, that's what I thought. All right, Bijou. I am going to put you on the spot, my man, because you had a thread, and I'm curious to know if you've been doing any work on this. If this is just your kind of intuition, if you know this for a fact.
Nah, I'm just jumping in with an opinion here. Really.
Okay.
I haven't been doing a lot of work on it. Just following.
Okay.
It's more like social media data mining. Rather than technical analysis. So, but I do sometimes run a Minsky model here and there, and so I'm just using a sort of broad broader approach and understanding of the macro. So, and some of the academic literature in the past. So, and a bit of history. Like it's like I can't model it right now. I just don't have all of the cases and all the data to get it into a model to be confident about this. So that's why I'm just saying it's an activist alert. It's not something that I would take any action on. It's just to be aware when you talk about MMT with people. And if you follow Douglas and Warren and the others who are talking about how the interest rate hikes are stimulating the economy through, a regressive trickle down, but basically interest income for people who have money, and forward pricing effects and so forth affecting contracts. It's okay to say that this is stimulating the economy in a regressive way, and if you want to get into debates though, you should probably know a little bit more nuance. And one of the nuances is, like, if you think about in the past where interest rate hikes have been not so good, have crashed the economy. You talk about Volcker and all that. It's an interesting dynamic they should just be aware of if you talk to people. And it's very hard to do this on Twitter. So it's more like if you're having a discussion with a friend about these things and they're warm to MMT, but then they maybe have heard some things.
Yeah. What happened in the 80s? 70s and 80s.
Yeah. And they're kind of like, so you're saying that interest rates are actually helping the economy in the macro at the moment. So you got to understand that, right? Back then there was a lot of different things keeping inflation high, and also the government debt to GDP ratio was not as high. So it needs to be, the government has to have outstanding treasury debt at about above 50 or 60%. Is what I've seen from Randy Ray and the others at the Levy Institute is that's around about the level. Now they weren't using too sophisticated a model, like they weren't using Minsky type models. They were just using standard econometrics models. But for what it's worth, you can trust those in the short run. They're good for sort of impulse analysis or just short-term trends. So for the interest rate hikes to be a stimulus, the government needs to have a lot of outstanding debt to be able to pay the interest on, right?
Yep.
And in addition to the forward prices. So the forward prices don't work so much if you're not injecting the currency to support the prices. Then if you're not injecting the currency to support the higher term structure of prices, then something is going to probably give. I say probably because it's hard to find good data and instances where all this sort of plays out the way it would in my head. So I'm just giving a story. Or a narrative here. And so you can look at maybe Australia and New Zealand where the interest rate hikes and maybe not having the great effect that we want because our government debt to GDP ratio is around, 50%, somewhere there. And then you might say, then someone might say, well, what about Argentina, who might have a debt to GDP ratio of something like 55%, something like that, say. I'm just trying to remember the numbers. I'm not good at memorizing the numbers, but say they're like that, and they might say, oh, well, how come the interest rates are causing a lot of inflation there and there's nothing too bad happening in their economy there? And so then you say, well, it's the enormous effect of that they've got massively higher interest rates, and so the injection of currency is coming in, and so the issue is whereabouts is that threshold debt to GDP ratio where that effect will kick in. And of course, remember, it's only one effect because you've got to have it play out in the markets. You've got to have the trickle down effect actually working. And so, what you'd say is, without actually, having a microscope to look into all the macro pictures and what's happening with every individual firm, what Warren say would be doing is just saying, well, I don't know how it's working, but it's working. There is some trickle down effect happening in the United States. The currency injection is happening somehow, and it's keeping employment going and stimulating your economy. Now, that might not be the case in some other countries like Australia and New Zealand, where New Zealand's maybe in a technical recession, and it might get pretty bad because our government, being neoliberals, hell bent on, keeping the government debt low. And they keep, proclaiming that, we've got this really low debt, like it's a good thing. And so obviously then in that case, we might be below the threshold where the interest income is actually not stimulating our economy too badly. And so the working class are really maybe suffering in New Zealand. And we've still got quite high grocery prices too. There seems to be still some price gouging. And so yes, the interest rate hikes are not playing out too well in Australia and New Zealand, especially in New Zealand. And so you've got to have those caveats. That's what my narrative was about.
Okay.
Yeah, I wish I could model it and work out what that magical or the threshold debt to GDP ratio was. But,
so I just looked it up.
Randy Ray did it in the past.
Am I? Sometimes the Fred can be frustrating when you're just trying to search off the top of your head. And the BIS seems to be down, but I pulled up New Zealand here. Does this look right? Nominal total credit to the government adjusted for breaks, New Zealand, and then this is percent to GDP, right below 50%.
I don't know. I have to look.
I guess you'd call it the public debt to GDP would be 50%.
Okay. That could be similar to the number that we're looking at. Yeah.
Okay.
They do publish at Stats New Zealand too. It may be off by 2 or 3% here, but that looks about right.
Okay.
So we're definitely not at like 150% levels yet, and so I think we would. So I reckon for the interest rates to really heat up New Zealand's economy, I think we'd have to have more of a trickle down effect. We'd have to have really frisky rich people who really want to spend and invest in that sort of thing, and that's really really difficult post COVID for New Zealand because our immigration got stunted. We haven't had a lot of immigrants coming in, and there's a huge number of jobs that are unfilled. Just because the skills match is not there, and we don't have job guarantee. So our unemployment, I think, is still pretty
okay.
Well, it's not really bad, but I think it's not as good as it could be. And so
I just looked it up. This is the correct data series for New Zealand on the BIS website. So I did look it up. That is correct. Keep going though.
Oh, that's good. Yeah, so I think that's about the end of the story.
Okay.
I mean, we yet to see. I don't know what our central bank is going to be doing. Honestly, I think they're just following the Fed or the Reserve Bank of Australia, or it's all sort of just a group thing. Really. So they don't understand the MMT. They don't understand the macro.
Yeah.
I know there are some people there who do, but they're very low level. Okay, they don't really have a lot of power within the Treasury or the Reserve Bank of New Zealand, and so they're just in a job and they're just trying to survive. They don't get a chance to talk at the policy making level. So all this is it's interesting, and it's good actually. Though it's good to have New Zealand as a sort of pinata to see what the other side of interest rate hikes policy could be when you don't have a full comprehension of the macro picture. But it's not causing a complete recession yet. It's just really hurting small businesses and households needlessly. Anyway, so we need that government debt to be bigger, and the government is just unwilling to invest and spend, and they keep talking about New Zealand is, as most people probably would know or probably hear from the media, fairly progressive country, fairly egalitarian, but we're also very, very neoliberal at the same time, and so we want to do all this greening of the economy and everything like that.
Yep.
We want to have electric, and we want to have a lot more public transport, and there's a big constituency in New Zealand for all those changes. It's a massive constituency, and they're just frustrated that the government does it. It's like they want to pay more taxes.
Yeah.
It's like, how can I pay more taxes to get this done? And it's like, oh, dude, there's no need to do that. So that's our bind at the moment. and that was the source of my thread. I just wanted to. It was more for the inside activists, so I think I tagged
Only,
it. I actually don't know how to use Twitter that well, but I just said, only people who are like following me can reply. Because it was just for activists, and just be careful when you talk to people. If you take the US narrative that Douglas and Warren would be on about, and the Norminator, may not apply to other countries. Got to carefully this is just the first thing to look at, not the only thing. The first thing to look at would be the government debt to GDP ratio to see if there's any chance for even trickle down. But then after that, you got to think about, well, is there actual trickle down? Are the rich folks hoarding it all, or are they actually spending it and hiring people? Because there's only so many McDonald's burgers they can eat per day to inject their savings into the economy.
Yeah,
they could be buying the yachts and the Rolls Royce and whatever.
Just for the record, though, even if from a financial standpoint, I think this is a dynamic that will play out that kind of makes sense under like kind of a Minsky model, debt deflation style model. Even if the additional interest income only goes to the rich, and it comes to a point where the bottom half can't shake it out of the hands of the rich, that money still has to go somewhere in the financial economy, right? And so I think a scenario that we could see play out. This is one of the things I explained on the Steve & Friends podcast with Ty, is that I think what we'll see is faster and faster acceleration of the financial sector because more and more of the additional interest income is being essentially consumed, if you will, by the financial sector, as opposed to kind of ripped out of the hands by the, we'll call it the labor sector. And I think that makes sense. One of the things that I would pay attention to is as asset prices start to accelerate higher, that will be a sign that we're closer and closer to kind of a breakdown of this high interest rate dynamic.
Sounds right.
Now that could take years to play out.
Yes. Well, if they've got imports to buy, it's like the thing is, it could in New Zealand, it could just turn into more imports, and so someone's benefiting. Someone overseas, but not New Zealand firms, because we don't produce enough for our own domestic needs in terms of tech and so forth. I mean, we have it really good in a certain way because we export low value added goods like lumber and or actually we have very high quality agriculture and horticulture, of course, so that goes out. But and we also export our land, tourism. One of our biggest exports at the moment is tourism, but so all that sort of stuff is okay for New Zealand, because in return we get your smartphones and your computers and your Rolls Royces or BMWs or whatever, and so it works out generally pretty well. But the way it's going at the moment, it's like it's only people who already have money who are going to be able to afford those imports. And I cut back myself on Amazon things. Actually, I try not to use Amazon, but yeah.
Try not to. That's, yeah.
I'm all electronic books these days. I love a good paper book though. Like I used to buy a lot of books, but I cut back now, and it's mostly PDFs and EPUB electronic books, which is a bit sad. But yeah, I think there's a I don't know. I don't know how this ends either, but I think New Zealand will sort of escape okay out of this. It's just that it has caused a massive increase in inequality, and really lost chance for the government to use the pandemic era to really boost government investment in healthcare and infrastructure and that sort of thing.
Yep.
I mean, it's the same story, neoliberal story everywhere. It's just that it's not all the same as the USA.
So
that'd be my story.
Couple things. I pulled up the total credit to the government adjusted for total credit to the government and the nominal total credit to the government for the U.S. And I guess I don't know if I'm pretty sure this is the correct the correct chart to be looking at here. But you are right. This is interesting. I guess it's a really good point you bring up. We were below the 50% threshold in the 1980s, which is why one of the charts I had up. And by the way, Eugenio, really good question. I'll address that in just a second. Give my thoughts. Which is why I brought up this chart back in the 70s and 80s when you do the rate of change of spending in real terms. We were in massive real surplus territory to the government sector. So I think you're right. I think you're onto something, and I think it does need to be adjusted in real terms. And I think at some point, especially
if I'd had the time, I'd have maybe dug in and looked at whether we're heading towards a real surplus in New Zealand. It might be the case that we are.
It could be in real terms, right? I mean, that's what you want to look up. But one of the ways you can get there, obviously, is if inflation via the transmission of higher oil prices gets us there. I mean, that's one way that we could I mean, at some point we could just see oil prices and the real cost of goods just get shot higher.
Zealand's pretty exposed to that.
All right, going on to this is a good question that Eugenio asked about. If money goes into buying treasuries, isn't that effectively removed from the economy and doesn't lift financial or labor sectors? So if it does just go to purchase new treasuries, and I mean depending on what it is, whatever it is that the bank would want to ultimately keep that additional capital in, it does buffer their overall capital structure though. So they would be more likely to create new loans, right? And they would have the capacity, the regulatory capacity to do so. And then the demand for the higher income can always be met via higher loans, right? So I think it's hard for me to see a scenario where even if they just decide to just ship it into the bond side, that I mean, banks are always going to be capitalistic in their outlook, right?
But also, wouldn't you say that the evidence of the fact of the higher treasury issue is a result of past government spending
and the ability to support it? Yeah.
So the spending has already taken place, and so you have supported the economy and labor in a way. And then it's just because the
I get what you're saying.
They have to offset that with treasuries if they want to fix the interest rate.
Yeah,
and so I think Ryan would probably agree with me on that one.
He would. I'm not disagreeing, and that's actually a really good point though too. Is that the spending happened first, and so
the treasuries is not a demand withdrawal drain. That's what a fixed exchange.
He's not. I don't think the argument that Eugenio is making is that argument. I think the argument that's trying to be the argument that's trying to be made there is: are you ultimately going to get aggregate demand if you just constantly get saving by the new interest income? And my point is, and you make a kind of a dual threat point too, is those bonds add to the capital structure. So as long as there's demand for new loans, which there will be, because there has to be, you're going to have to grow into the higher prices, right? I mean, I guess even the monetarist would agree that what higher interest rates are attempting to do is make things more expensive, right? The MMT insight is that they're also getting a fresh raise to pay for the higher prices, right? To me, there will always be a demand for that higher income that can support that, But why I think, though, too, that what we would see in a scenario in which things started to collapse, why I think we would see equity markets start to take off, is because I think you'll get into that kind of Minsky-Ponzi dynamic, right, where you need the asset prices to continue to accelerate higher. Right. And I could see that becoming a situation. Now, look, I'm not an expert on where banking regulation is to know if that is a risk that we currently face. But it's only a vote away to allow banks to get themselves into a Ponzi situation. to a Ponzi situation once again. So those are my thoughts in terms of why I think ultimately that money will always find its way to support the demand for higher incomes that will then keep support to the higher price structure. I'm seeing Shot come in with some, I'm sure, are good points. I haven't had a chance to read through them all. So Bijou, I'll let you get a word in. And
my brain tuned off a little bit when you mentioned the Ponzi thing there. I have to go over it again. I in my head, I imagine Warren Mosley sort of pointing something out why that wouldn't be the case, but I can't formulate it at the moment. So maybe better to just go back to the chat and have a look at what they're thinking rather than me speculating on all that stuff.
Okay, so the idea of the Ponzi thing is that banks will eventually get themselves in a situation where they're only staying solvent because their assets are increasing at an accelerating rate.
Can they actually get into that position?
Well, that's what I don't know. I mean, I don't know if regulations are a lot stricter today than they were back in 2000.
Yeah, but I don't know enough to be. I mean, okay, in theory, you might be right if they don't.
My point is, okay, here's my point. Whether or not they can get back into that situation that they were in prior to 2008, right? The evidence that they are getting themselves into that situation are accelerating asset prices, right?
Okay.
And I'm not just talking about asset prices going higher just because government spending is going higher, and that's just the net result of government spending. Right. What I'm saying is, if we actually get ourselves into a sort of bubble situation where new loans are being created to simply support the higher asset structure, then you get yourself into a situation where the banks are so susceptible to those asset prices. I know Glass-Steagall and other regulations.
I think that dynamic is understood by even the neoclassicals, though, right? So
I don't think so, though.
You don't?
I don't know. I don't think they. I mean, I think Steve Keen would say they don't understand that. Otherwise, his view would be fully adopted at this point.
Maybe. I know. I thought there was a vague awareness of Minsky.
There is, but I don't think anyone. I don't think anyone understands. Like, I mean, they talk about the Minsky moment, but I don't think they actually understand the dynamics that are actually playing out under the hood. Yeah.
Maybe not. I mean, I don't know. Can't read their minds, but I just thought there was an understanding of that. So it would only be really, really fraudulent banks or someone getting.
I mean, let's put it this way: there still is an emphasis to regulate from the liability side as opposed to the asset side. I mean, I mean, certainly regulation on the asset side has gotten a lot better than where it was in 2000, 2005. But
maybe you're saying maybe not enough. Yeah, and also enforcement is an issue.
Josh, interest. I got to listen to this. I saw it come up and just kind of ran out of time. But interest sensitivity is something. So there's that called the Camel's review, or kind of a Camel's analysis that banks will do on their balance sheet. And the S is for interest rate sensitivity. And I mean, his point is that banks are supposed to be positioned in a way where the Fed is capable of jacking interest rates higher, and then the banks don't have a liquidity crisis. Right. Which, I mean, we've been down that, we beat that horse dead back in March and April. But at the end of the day, it is just bad regulatory theory. It is bad regulatory application that allows those banks to get there anyway. But the bank should be positioned and hedged in such a way where the risk of higher interest rates, the convexity there, is not something that would be absolved by the bank. But clearly SVB wasn't in a position to do that.
I think we can agree on that. Yeah.
God, we've hit a lot on markets tonight. I don't know, Bijou, if you had anything else on top of the list that you wanted to jump into, or the middle of the list, or the bottom of the list.
No, man. I was interested in discussing Jamie Galbraith's article on what I would call Furmanitis, Jason Furman, and the whole thing about the inflation bogeyman and all that.
Do you want me to bring up? Do you want me to bring up that that article, or
yeah, I guess you could.
can you message me in WhatsApp? Do you have WhatsApp up?
Oh, what's that? Yeah.
Oh, you just put it in the chat. Look at that. Sheesh.
Well, I got these admin privileges. You giving me a microphone?
Sheesh.
Yeah.
All right, it's brought up.
These are more like little notes that I might, be wanting to give from time to time. Another one was Brian Romanchuk. If you look at his Substack, he has an interesting perspective on the Bernanke-Blanchard thing about inflation. The too long didn't read thing about that is actually Brian writes fairly sparingly, so it's not a long read.
Okay,
is that Bernanke and Blanchard sort of get the main inflation story correct. Like it's hard not to. It's a spike in energy, food supply shocks, and that sort of thing.
Yeah.
But then on the other side, because they're using a brain dead sort of linear econometrics model, they basically then say that it's because the labor market heated up that we had lingering inflation. So there's that story, and that ties in with Isabella Weber and Mark Lavoie having but basically everyone dunking on Isabella about the her take on inflation and how it's maybe not a bad thing to introduce caps on costs and that sort of thing. So price caps. I mean,
I'm gonna switch to your tablet. Is that okay? Do you care if I bring your?
Maybe okay. Yeah.
Is that okay?
Yeah.
Okay.
Just a couple of notes there I made just to maybe talk about them in case people hadn't been.
Yeah. If anyone is interested in any of the notes.
Yeah. So Jamie Galbraith gives a good overview of the Fed's insane policy and that sort of thing about how they're trying to fight inflation with the wrong tools. They don't really have the tools. And he mentions Weber's write up on that too. And I just added a few notes that it's actually probably a little bit more interesting than even Galbraith points out. I think because he's perhaps maybe not quite on board with Warren about the effect of the interest rates, Warren and Douglas. So you've got an increase in the rate of change of prices from the interest rate itself, but that leads to the interest income and the structure of term prices goes up too. So that's going to cause a bit of inflation, and just naturally, and that's the interest rate. The other thing that people don't get is that the interest rate that you and Warren are always talking about is kind of like fits the academic definition of a type of inflation, which is a general increase in the price level continuously.
Yep.
Continuous inflation, the interest rate acts as a continuous upwards gauge. I was gauging the currency downwards, but prices upwards. And what else did I mention? So the tighter labor market is an interesting effect too. So it's interesting because I don't think the mainstream economists really understand that either. Because with a tighter labor market, you also, this is just my narrative, just adding to what Galbraith might have said. With a tighter labor market, I think you got less bullshit jobs. So you've got your productivity, in a sense, is going up. Not because you got the workers are all better skilled and all that sort of thing. It's just a natural effect of having people employed that are not doing bullshit.
Yeah.
And so that actually can increase your quality of your output, if not your actual total output. And so that can be a downwards pressure on inflation. And
that's a really good that's a good point though, right there.
You mentioned the easing of the supply bottleneck. So that where does that go with our narrative? It means that this interest rate effect stimulating the economy could go on for quite a while, right?
Yes,
until you max out the labor market and really, but there's so much slack in the labor market because there's so many bullshit jobs. If you just keep squeezing them, you're actually creating a leaner, meaner economy in a way. No one's got a policy to make that happen. It's just, I think it might be an effect that happens naturally. And as well as all that, the bottlenecks are still easing up, so that's price pressure down, plus quantity going up because of the relaxing of the supply pressures. And then what have I got? Uncertainty. I think Ty Keynes and you, or was it Ty? I forget who it was, but someone was talking about that in something I was listening to recently, that the uncertainty is a major effect. And, I agree. It's like you don't want to miss out, so you want to keep hiking your prices as long as everyone else is. If you're a firm, if you're a seller, so you don't want to miss out on the price gouging as well. And so it's not just that some firms are price gouging. It's one or two influential firms, say an Amazon or a Walmart or whoever it is, increasing their markup just because they think the economy can withstand it.
Yep.
And they don't mind getting more profits, and not paying their workers. So the workers are somehow, getting the income to buy the goods that the firms are producing. Then that's again another inflationary pressure. It's just because I think what Weber was saying is it's not just everyone's just greedy. It's just that if some other firm is price gouging, then your incentive is to sort of not miss out on that. Yeah. And then again, what Douglas has been on about is that for the interest income to support the economy and to support prices, it has to be somehow spent. But it is, because the government is injecting the income, the deficit's going up, and that's supporting the capacity for people to bid for whatever had been saved inventory that was built up during COVID and all that sort of thing. So you got a sort of massive sort of burst here. That might not be, again, to use our language framing from before, that might not really be technically inflationary, that effect from releasing saved inventory, because it's a one-off effect once the inventory levels get back to sort of stable or quasi-equilibrium or whatever you want to call it. And so the last question I had was whether there is, how much trickle down and what is it? And I was listening to the MMT podcast the other day with Warren, and he was quite funny. He was saying, "Well, I don't know how it works. It just seems to be working." So
wait, what doesn't? I'm sorry, what doesn't he know? What
Warren was saying. I think Christian or Patricia, I forget who it was, asked him, so how. I think Warren just volunteered it. Actually, he just pointed out that a lot of other MMTers, what he calls the headline MMTers, are kind of a bit on at him a little bit about how on earth the interest income does trickle down. Yeah. So he said, I don't know, but it looks like Rolls-Royce was selling all their inventory. Luxury yachts are selling like hotcakes, and someone has to cut down the teak wood in the Amazon rainforest is one of his things that he says, to build the decks for these luxury yachts. There's
this guy on Twitter. He keeps getting everything right, and he's just dogging on the Austrians and the Neoclassicals, the Monetarists. Right? He put out this tweet a couple, maybe a week ago, 2 weeks ago now, where he laid out the kind of entire circuit, if you will, color coded and everything, and how the higher interest rates are fully finding its way back into. It's spectacular. So you can find him. His name's Douglas. He's over at MMT Macro Trader. Yeah.
Someone's already done the work.
Obviously
Warren Moses not really watching.
He might have liked this, but he's not taking notes. No, I'm sure he gets the general gist that this is how it happens. But actually, I don't know if this guy looks familiar. This guy had more hair. I gotta update the picture, man. It's been a few years since.
Just a shadow.
God, it's gone so fast.
Nice, confident-looking picture there.
Oh yeah. I was confident that it was going to stay on top of my head. Oh my
man.
God. All right, back to
Yeah.
Bijou's notes.
Okay. Well, there was one other thing. Okay. I had a little bit of a hot take against the post Keynesians and all that. So
Okay,
this is
okay.
just going to continue a little bit of my rant like that. It just rubs me a little bit the wrong way when the other heterodox economists sort of just dismiss MMT as just accounting and T accounts and all that, like Ty's friend Mike Zicki there. So I think I already mentioned that before, so I won't try to go on too much about it. But I would call it a bit of a fixed exchange rate itis effect, because a lot of post Keynesians, even if they've sort of understood MMT and the importance of the floating exchange rates, I still think they're susceptible just because of ingrained thinking in their way of thinking, that they'll default to a fixed exchange rate type of mentality. So, and I'm pretty sure, I mean, I don't want to say this, but it just seems to me that they just don't read Warren, because there's a paper that Warren and Matt Forstad had put out a few years ago, and you can get it free on Warren's website, that talks about the analysis of a currency and other commodities, or general framework of analysis for currencies and other commodities. And it goes through this, the fixed versus the floating exchange rate. And it's just so beautiful. It's so crystal clear. It's not too technical. You can really understand it quite easily. And, it gives good practical examples from Hong Kong, Russia, as case studies, and like what happens on fixed exchange rates or currency pegs or whatever. So that's really good stuff to read. And I think that's what a lot of the other heterodox economists maybe still don't understand, and still aren't giving MMT credit for that. And like I said, I'm not wedded to this idea that MMT is a separate school, but I always just think of MMT as a macroeconomics framework, and it's a superset of a lot of those other heterodox schools. So it's a superset of post-Keynesianism, because the post-Keynesians don't still really understand the floating exchange rate, which is what Douglas was really good at talking about on the show with Steve Keen's friends. So I want to just give you props for that.
Yeah. Let me jump in on this conversation. I really brought up a really good point here, where I think the disconnect between the two schools. I mean, look, had and I said this on the stream, had the neoclassical, what I'm just going to call the Steve Keen school of thought, even though it obviously precedes him, and it's broader than just Steve, but had it had a pithy name, right? Like the Flow Guys or something. I mean, I don't know. You know what I'm saying, right? Like right. I mean, this I'd be called that. Macro trader, right? But I mean, MMT, people just, I made a decision after the 2020 boom to switch over to MMT macro trader. People understand what it is. Sometimes I regret it, because I think so many people are just so,
viscerally just
it's a great word, viscerally a visceral reaction,
but stance on their whole life.
But I also think that when they see that it consistently is getting things right, that they're at least willing to, the ones that are ultimately going to come on board are going to be the ones that are at least willing to kind of assess things. So, but
MMT is good, is really good, good solid anti-advertising.
Yeah. But I feel like to say that MMT is just accounting would be akin to saying that we'll just call it the Steve Keen heterodox school is just akin to saying that, we all know that loans create deposits. That's all that's being stated there, right?
Nothing new.
Nothing new. We've known this. And it's like, no, I mean, there's a whole dynamic that's at play, and I'm just going to call it the debt deflation model, because I think that best describes what I think Steve Keen's best insights really are. It's a debt deflation model, and there is so much taking place there that is beyond loans create deposits. And I agree that the MMTers do not push enough the dynamics at play in the endogenous cycle, and they are so important. I'm going to switch over to the margin debt acceleration. There are, listen, it is a tie. If you could get margin debt data in real time, the acceleration of margin debt in terms of leading S&P flows is phenomenal. I mean, it is, when we do the mutual information, we do the Granger cause stuff. I mean, this is the data that you want. This is other private debt measurements. If we could get this data in real time, we would have a heads up on where markets are going, right? Because we could calculate the acceleration. We would understand the dynamics that are at play, how to interpret those, right? So the insights that the debt deflation, the Steve Keen world gives us are almost more valuable to people like me who are trying to understand moves in markets, as opposed to necessarily coming up with like policy recommendations, right? This stuff is as valuable, if not more, than kind of the, what we call kind of the core MMT framework. But on the flip side, to say that MMT is just is accounting again, I mean it's more like it's an entire framework, right? I mean, you put a rocket on a rocket,
because that is a monetary system model.
But I guess what I'm saying is like the real time applicable insights from MMT, like you're gonna end up at the wrong place if you get the MMT stuff wrong, and there are so many steps that you have to get it right. And I mean, the vast majority of people, it's still hard for them to wrap their heads around the interest, not the interest rate thing, the floating exchange versus the fixed exchange, right? Exactly. And the dynamics at play. And I mean, that is an MMT insight, because it's step one of MMT, just recognizing what decisions have been made in terms of the monetary policy you're going to set up. So,
exactly right.
In my book, they are both very important to everything I do, and I could never minimize any of the school of thought into just either loans create deposits, or it's just accounting. I mean, there's so much going on that you have to get right if you're going to create a holistic theory to understand how to interpret where markets are going.
That's right.
Those are my thoughts.
Yeah. Well, there's even more than that. Understanding the currency as a simple public monopoly is hugely important, because then you have an ability to understand all of the types of inflation are not all bad.
Yep.
And in fact, inflation is a good thing if it's done in the right way, with a type of Giesel currency type of effect to run a hot economy monetarily. But you can do it sustainably, so it's not energy hot. So you can break a bit of the link between your GDP output and your energy output. You want that to be sublinear. You don't want it to continue to be just linear. So you can do that with a hot economy, with a government that's prepared to run high inflation. That's essentially one of the things it does is it taxes away hoarded wealth. It keeps currency circulating. But the thing is, the government, a monopoly on the currency, a government can run that economy in a green way. You can run it low energy. How do you do that? You create a lot of jobs that you just hire people who are available to work, and jobs that are not energy intensive jobs, teaching, education, software, all those sort of things. Maybe not so much AI software, heating up GPUs and servers all over the place, but just sort of the basic public service type software and things like that. And what other jobs are there? Gardening, green gardening jobs, permaculture, all sorts of things. There's so much that can be done that's not too energy intensive. It doesn't require burning a lot of fossil fuels. Service economy, care economy, that sort of thing. And that can be done where people are as they are. They don't have to, go take transport to get to their job anywhere. It can just be done with better government investments. So you can run an economy hot. And I don't think even the post-Keynesian would be worried about inflation in that sense. They think the taxes still have to pay off the inflation and so forth, or the debt that the government is using to drive inflation deliberately high. But I mean, we're not there yet because people don't understand. So, I mean, you can't. It's very hard to talk about these things because people will just think you're mad because it's not the current paradigm. And so MMT has a lot of work to do to raise awareness about these possibilities, that policy options that are available to governments that we're not using and not exploiting because people don't understand the currency system. And it takes a lot of education and activist effort to do this. Not just your mathematics and your science is not going to get you there, because this is a human story ultimately in the end when it comes down to policy making. And so although we try to get the mathematics right, do the modeling correctly, all that is really good, but without the proper education, without the better attempts to get better language framing, which I think our friend Michael Cruz would be really good at. I wish he was sort of here to help me out on some of that sometimes, but because even I sometimes will revert into false language framing just in order to let's face it, just in order to communicate with people. Sometimes you're just sort of slipping into little phrases and uses of language that are not really correct. And it's a really good thing to learn MMT, because then you have the ability to train yourself, to teach yourself to use better language framing. And it can be a very good educational tool because it acts like a sort of a cognitive dissonance. You say something in a certain context when you're talking about public finance and investment, that's just completely like the opposite of what people say, but you do it in a proper way. Like talk about the public surplus or the public sector savings as if it was actually the people's savings, not the government's. And you can sort of stun people that way, and they'll maybe ask questions and so on. So you can MMT gives you that perspective because you're not just stuck in the past with like the whole post-Keynesian type stories where they're just using the same language that economists have used forever. And so they can often get things wrong, just in a psychological sense, even if in a technical sense they sort of might know what they're talking about. And a good example of that is the seventh of the 7 deadly innocent frauds. Okay,
your
so
favorite.
The idea there, it's my favorite. So the idea is that it's always this tax pay for rubbish they got on about, right? But the idea is is that higher government investments or deficits today will cause higher tax returns tomorrow, just through the automatic stabilizers. You don't even have to increase the tax rates; just keep things as they are, because the more government investment and spending goes on, the economy booms, and so tax receipts are automatically going to rise. So it's not a tax paid for, but you can point this out to people because people still get it wrong. They think, there's a cost that we have to pay for later from all this, wild spending. It's like, no, it's not. The tax return will increase automatically, and it's a good thing. So the 7th deadly innocent fraud is that there will be higher taxes tomorrow. Yes, there will be higher taxes tomorrow, all other things equal. The myth is that it's a bad thing. It's a good thing. It just shows you that your economy is pretty healthy. If that's where the tax return is, coming from, not sort of some draconian effort to get back the gold off everyone because you think you need it for running a government surplus. That would not be we're talking about an automatic stabilizer. Automatically, the tax receipts would rise from increased government spending today. That would help cool off inflation. So yeah, I just always think that MMT. I like to think of MMT as a superset of all the other heterodox schools. And so maybe, I don't know, maybe I'm just using bad language framing using the word MMT, but I think people have talked about how maybe in the future we'll just become macroeconomics, and it's just the word that we'll use. But for now, for now it helps to because you got to turn a lot of switches off and switch a lot of switches backwards in people's brains to get them thinking the right way. And if they're scared of MMT or whatever, you can be sensitive to that. So I've talked to people in local government here, and they tell me, well, I can't mention MMT because it just turns people off. And so in that case, you've got to know your audience. And so as well as using good language framing as an activist, you want to also know your audience and not piss them off, not alienate them or not not turn them away directly. And so you don't have to mention the words MMT, that can be just between us. But if you tell a
really
story
based economics,
eventually they might say, oh, that sounds a lot like MMT. Are you an MMT? And then at that point you can say, well, this is the understanding that we've got, and yes, we call it MMT, but I'm just going to promote this like forever now. You just got to get back to the story that it's a framework for analysis when you have currency as a government monopoly, and you can sort of let that drop and just say, oh yeah, the thing that some libertarians and so forth, like Enrique and them might question is whether that is actually true. Is the government a currency monopolist? But that would just be a political economy type of nerd question, because they're talking about private industry and the oligarchs control the government, so it's actually not a public monopoly. It's controlled by Wall Street. So that's where you can have that sort of other sort of interesting conversation. But in law and in effect in most countries, it is just a simple public monopoly, and that's what it is. And so if you come at it that way, don't scare them with the words MMT. So it's hilarious that 3 letters can, freak people out a bit and turn them off. But
oh my God, it's amazing maybe, when you see these people on Twitter and shit. Weird. Oh my God, MMT, MMT. It's all MMT's fault because there's so many elected officials who have openly stated that they're trying to put their MMT policies. They're all MMT. It's all MMT's fault.
It's going to crash the currency. You destroy the currency. It's going to go to zero. No. And the guy's falling in.
The only thing that's MMT's fault, you know what I will tell you is an MMT's fault, is making those idiots look like fucking idiots. That is MMT's fault. Okay, they've been saying, it's gonna be recession. It's gonna be recession. The rates are gonna just ruin everything. It's gonna ruin everything. Demand's gonna be at zero. No, demand for your stupid newsletter letting people know to stay in cash and get on the sidelines, that's going to zero. I'll digress.
I'll tell you, I'm laughing about it, but it's a serious issue, man. It's so serious. So, the other thing I'll say about this is that when Douglas Douglas has got this, you got this project here at MMT Macro Trader, but it's not like you're not an activist. In fact, I think of you and Ryan and Adam and Ty. They're all actually pretty good activists because you're doing some basic education as well as your other activities in modeling and so forth. But I want to just impress upon people how important activists are. They may be dumb when it comes to some of the language framing. They may be inflammatory. They may get angry and aggressive, but they're doing good work. I mean, you just have to think back to all of the gains that society has made that have benefited everyone. Universal suffrage, civil rights, opening up of all sorts of opportunities and possibilities for working people, have all been gained not by mathematical modeling. You didn't get the civil rights era by, looking at the biology and figuring out, racism isn't really a thing. It's just something we, socially construct. None of that, you didn't have to go to the biologists to figure that out. You didn't have to go to the mathematicians to figure out that, how the currency works. People can figure these things out for themselves. They can have a story about it. They don't have to be good at the mathematical modeling or the science, and they can go out and be active and change the world in that way. And it's hugely important. That's the way you get your civil rights. Get it from the mathematicians and scientists. They can support you and support all sort of peripheral or marginal activities that support the activists. And I do think that's actually pretty important in the macroeconomics case, because we're fighting against not like a regressive, like racist or homophobic or a sexist mindset in mainstream economics. We're fighting against sort of nerds who just think that they know better, think that they know how an economy works. And so I guess macroeconomics and MMT activism is a little bit different to like civil rights fights in that sense, is that there is a role actually here for some mathematical modeling, just to sort of back you up. It's like, look, I've got a model, it works. It's actually better than yours. So what have you just to say to that? And then that can empower the activists to even be perhaps, more aggressive.
Yeah.
But I hope they do it in a nice way. I hope they do it in a nice way.
Yeah.
It's like,
yeah.
Look, over time, the evidence is gonna build that the MMT understanding is a correct way to understand a government that's a currency and legal monopoly. And it's going to be harder and harder over time for people to resist the pressure of that. But you can't do it just with the mathematics. We need these activists to be on our side and to be our allies. And that'll be my story on that. I think I started there with the Jamie Galbraith's article, which is good read.
Yeah.
So
I'll
point you back to that. But I just wanted to, give all our activists, a cheer and say, continue the fight. And, hopefully over time, I mean, we're behind on the mathematical modeling yet. We're still trying to catch up, right? To get really, really good MMT models that can fit different countries and almost like plug and play them. So you can just grab them as an activist and hand them out. And I'll stick all that out as free software. But, this takes time. Whereas activists can fight the good fight immediately, and they shouldn't wait for us modelers and nerds to catch up to them. They should just go out full blast and try and promote MMT. But just be careful about the words. You can, if you talk to policy people who are scared about the word, the Larry Summers think it's grotesque. That you got to be. There's an art to good activism that you can use the framework for understanding and gradually bring people towards it. So hope that all makes sense and not too long a rant, but I just wanted to get that off my chest.
I like it. I gotta get my thoughts around activism, because there's a certain kind of activism that just does not appeal to me at all. And then there's a certain amount of activism.
But horses, because there's activism that's good, there's activism that's bad. I agree with you.
Yeah. And I got to get my thoughts around exactly. I don't know. I mean, it's. I'm also not terribly. Maybe I am, and I just don't realize it. But I also don't feel like, like I have to have my tribe win, right? I mean, I hope I can be critical of, kind of discerning critical of people in my camp as much as people is outside of my camp.
That's right.
But I will be okay, let me put it this way though. I will act very tribal if people come at me with dumb shit. Like it's our three guys. I am still if the kids are listening, have them turn off the radio. But God, that guy coming back to me just today just grinded my gears when he just lost my crap. Well, have you thought of epistemological considerations first? That
guy's
jeez, oh,
he's funny.
Man.
He's funny. I had one of his followers actually tag me a little bit. That was fun. But I mean, there is tribalism, and tribalism is good. It's like you gotta have a unified community to build on. No one's going to promote sensible, humanistic, sane, and environmentally sustainable macroeconomics until they do really understand MMT and all of the other heterodox schools, the Marxists who point out how wage slavery is unjust and it's exploitative, and the Keynesians who point out or the post-Keynesians who point out the importance of banks as also currency creators, agents of government. I guess they don't always say agents of government. That's the problem that you need to resolve there, and they need to acknowledge, I think, that MMT is correct, that banks really are agents of the state, and but all those dynamics of the endogenous circuit and that sort of stuff, and the inflation component that comes from the competition between labor and capital. And what else? I'm gonna miss out a whole lot, so I'll not try to make a complete list here. But all those schools of thought, they all have their own little cliques, but if you get together, you're not going to move the needle on progress in society and get over all these hurdles that need massive government investments to overcome, like climate warming and so forth, until people unify. And so you do need to build groups, and you need to build strong groups. And if you happen to be forming a little bit of a tribe who's a little bit opposed to one of the other tribes, at least you can find points of unity and agreement. And I think, to me, that's what MMT does. It actually is a thread that can unify a lot of disparate groups, because you've got, people in our chat like Charles, who are a bit more sort of libertarian MMT. You got, and Real Progressive, you've got quite a few Marxist MMTers. And it only helps you become a better person in your particular sort of tribe for the causes that you're fighting for. But ultimately, I think throughout all of them, we're all fighting for a more peaceful world and a more just world, and better standards of living. And those are the things that everyone agrees on. And, what can I say? MMT is uniting everyone who wants to work for those goals in whatever way they see. And all the tribes, the different, political economies, the different ideologies about how we achieve those goals. But I think, they're not going to be contributing unless they actually understand MMT and the macroeconomics. And the other areas, fine grained down, like what should we do in scientific research? What should we do to control our police? What should we do to get rid of prisons, and what should we do to decommodify housing? All those things are sort of narrow special interest areas that need special expertise to really come up with really good solutions that are going to be culturally acceptable. But when there's the real resources available to do them, MMT will tell you that it's always economically, economically and financially, it can always be done. That's not the issue. Yeah, man. So,
Josh, I got to jump in here, man. Just so you know, I definitely, in my mind, I am saying I'm seeing I can't do a Peter Griffin voice, but yes, I am playing the Peter Griffin. You want to know what really grinds my gears? That's a bad take. Yeah. But Lois, yeah, that is absolutely what's playing in my head. I can't do it. I can't do it.
It was pretty good attempt. Pretty good.
I can hear it, right? I can hear it in my head. I can hear it in my mind's ear, if you will. But you
have to do a chat prompt. Tell the prompt, okay, this is in Peter Griffin's voice.
Yeah. Okay. Maybe what I got to do. Hopefully, this you can play. I think you can play short clips, and it doesn't get demonetized. But what I got to do is get. You want to know what really grinds my gears? I have a Stream Deck, so I gotta just get that on a button. Bijou, keep talking, man. I'm gonna get this. I'm gonna get this set up by the end of the night.
Related thing, one thing I was gonna put you on the spot off, but I'm not.
No, do it. Yeah.
Maybe next week. No, because I didn't get the time to. But I was gonna write a basketball commentary, so that'll come up. But I can't do it, right? I can't do it myself. This was for an outro for our live stream outros.
Okay.
But I can't do it because I realized that a New Zealand accent doesn't sound good as an Australian basketball commentator. So I'm gonna have to send you the script and get you to do that.
Oh, okay. Maybe. Oh no, I can never. No. I'm not allowed to do the outros.
You can't do basketball.
No, I can do it. I'm just not. I'm just saying the outro is the outro is a Bijou monopoly.
Okay.
You are the monopoly issuer.
I have to practice my American basketball commentary.
do your best Midwestern Canadian, Northern Michigan Yooper. Can you do it? Can you do it? Can you do a good Yooper? Do you know what I'm talking about?
I don't.
Okay.
What's a Yooper?
Like so the Michigan has an Upper Peninsula. It sounds like they're from Minnesota.
Yeah.
Yeah. I mean, occasionally I know I go towards that. Like, they'll say things about and you betcha. You bet you bottom dollar. It's almost like I can't do it. I can't do it right now. I
only need to do a mainstream broadcast accent. That's all I need.
Were you ever not a Family Guy? Were you ever a King of the Hill fan? Did you ever watch King of the Hill?
Yeah, I kind of liked it, but
okay.
I didn't get in big into it.
Do you remember the minister from Minnesota?
No,
she was a minister from Minnesota at the church, and she had a great Minnesota accent. Anyway, nice. Yeah, if you guys have ever watched that show, you know exactly what I'm talking about.
Yeah.
But anyway, that would be it, man.
Stuff.
Do a Midwest accent. Let's see.
All right.
I don't know, man. It's third hour. We're getting pretty deep into the live stream. I've had a lot of fun tonight. I promised we would have fun out of the gate. I promised we would have fun. Big Dog. Maybe you've taken off already. I know you were asking about markets. I did talk about markets. Actually, kind of an extended discussion. I'm still long. I mean, this is as I was explaining. Actually, I have my desire is to hold positions as long as I can until the data really says otherwise. And I've been long since December because I think we've been underpriced since then, and I still think we're underpriced. So that's my story, and I'm sticking to it. And I've come close to selling a few times, but haven't. And the tools that we've been developing over at the Patreon page have been paying off quite nicely. I don't know, Bijou, got anything else for tonight, or should we?
No, I don't think so. Maybe there's a few other notes that I haven't.
Eugenio, man, 3 a.m. in the UK. Nice. Thanks for sticking with us that late.
Yeah, thanks, Eugenio. Eugenio is a good MMT. I've seen Eugenio on the Steve King groups and
nice.
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 Good stuff to have these guys join in, guys or girls.
I know I call everyone a guy because our metrics on the channel tell me that 100% of the viewers are men. So if you're ever a woman and I'm calling you guy, let me know and I will modify that action.
I got one other thing that to do with the pipes before we head off here.
Okay.
But maybe I'll come back to this in another week because it's getting a bit late now. But you remember last week I had these piping issues. One was the actual plumbing pipes in the kitchen getting clogged up. The other was the coding I was trying to do inter-process communications and model controller, bit of programming. So then another pipe comes up with Michael Cruz. He's a friend of the show.
Yeah.
He messaged me saying, how we did a good live stream. He's always really supportive and tells us we've done a good job. But he mentioned something because I think I was chatting with Charles and libertarianism and Austrian school stuff. I think we had a decent chat about that last week. And so Michael comes at me and says, there's this libertarian to fascism pipeline. And he gives me a link, and I have a look at it, right? This is last week, after the show last week, and it's quite fascinating. So maybe that's something I'll bring up next night.
Oh, yeah, that's interesting. So, yeah. He's
I
noticed him going off in the chat on some of that stuff. I was appreciative while I was in the chat on Steve Keen and friends. That was kind of helpful because they were starting to talk about degrowth and stuff. It's just nothing I've really ever got into all that much. So it was neat to see him quickly pop in there and
talk about language framing. He's good on the language framing too. Yeah. So sometimes I get a chance to sort of correct him a little bit, but but he's actually quite interesting to chat with about that. And so So there's that. So yeah, libertarian fascism pipeline. I didn't really know that was a thing, but I understand that there's a definitely in the macro, like at the political level, there's a neoliberal to fascism pipeline, right? Because I've always subscribed to that whole thread in political economy and historical analysis, where it's the austerity, it's the neoliberals, it's the wonky economists trying to squeeze the working class and petty bourgeoisie who cause the fascisms to become popular, because people see fascism as a sort of an escape from that austerity.
Yeah.
It's a sort of a false promise, but it's an interesting sort of dynamic. And it's like everywhere fascism has arisen, you can see it's been preceded by some sort of neoliberalism. So we didn't actually have the term neoliberal in the 1930s, but that's exactly what the government of Chancellor Brunig was. This was after the Weimar hyperinflation, right? That had all gone away. And it was a very short period of history, so people get confused about it. But that had all gone away. Hyperinflation had gone away, and they were then in austerity because they was, to be honest, they were probably really scared of inducing another hyperinflation. But did they not understand that it was because of the war reparations? Wasn't that just completely blindingly obvious where all the inflation was coming from?
No, it was just
government spending.
It was their printing money.
Yeah, government had to print the money, otherwise people were going to die. So it was the later austerity of the government after that then made basically Nazis more popular. So that's a pipeline too. But this libertarian one was one that's sort of a new one. I couldn't understand it. I understood it, how it could work, and when I read about it, it was quite fascinating. It's actually a little bit related also to that accelerationism that I had before. That's what I would call something like a socialist or Marxist pipeline to fascism. It's like when you just find there's no hope in your socialism that you want, or your communitarianism, or whatever it is, and you see that the only way to get there is to use dictatorial authoritarian type powers, then you get this kind of the fascists that are a little bit like Stalin, or these accelerationists who I wouldn't call them all fascists, but it's like a fascistic type of notion where you just want to control things and make the nation state the supreme sort of object of everyone's worship or whatever, and just go hyper forward on all the rampant capitalism to get there as your way of getting there. So it's all very odd and it's weird and it's strange stuff, but it's very sort of fringe areas, but it's taken seriously by a lot of people, and so it's an interesting thing to look into. But anyway, not part of the research. Just
Darren, welcome, man. Sorry to cut you off, but it looks like you might have just stumbled into our MMT conversation.
Oh, yeah.
Welcome, man.
Yeah.
Yeah, Bijou, though. Yeah, going back to your point.
Yeah. Well, you can always rewind or rewatch, but
yeah. Unfortunately, Darren, we're nearing the end. We've been on for over 2.5 hours now. We're getting on to 2.5 hours, but
I was just going over some points that I might raise next week. So
about the pipeline,
pipelines and things. And also it ties in with Rushkoff's survival of the richest stuff, which is really, really interesting too.
Yeah.
But not something that you want to spend your research time on. This is just peripheral stuff for the live stream. Just to educate all the finance bros about political economy every Wednesday evening.
Yeah.
Get that stuff going.
Real quick before I have Bijou to the outro, Josh, we can talk currencies tomorrow. We can talk next week. Foreign exchange, you guys can see I'm getting pretty tired. Foreign exchange. We'll talk foreign exchange. I have some theories. It's nothing I actively trade. I also am curious about this idea that I need to look into. I've heard Randy talk about outline currency trading. That would be interesting to look into, but It's something.
John D. Harvey too. Yeah.
Okay. So it sounds like that's a thing then.
It's all funny. It's all overhead, right?
Yeah.
If you want arbitrage possibilities to discover pricing and all that sort of thing, if you're on a floating exchange rate, but the speculation distorts it. It doesn't help it.
Yeah.
Yeah.
Correct. Yeah. That makes sense. What about the Fed? George, I don't know if you've been in chat yet tonight, but welcome, man. What about the Fed talk of raising rates? Seems like the elastic snap back and forth between market freaking out and the high rates, and then the high rates creating higher markets. Yeah, I mean, I think that was at play a lot when the rate hike cycle originally began. I mean, I think there's some repricing that takes place due to rate sensitivity to assets like discounted cash flow stuff. That it takes place, but I think I think it takes place most with kind of the first acceleration of rate changes, and that gets priced in. I think at this point we will likely just see. I think we're starting to see the market now positively react to positive economic information because we're now kind of in a thoroughly bullish regime with the fiscal flow side. So that's kind of my take. Maybe I'm wrong. I mean, we've only been in this regime for a few months now, so maybe if the Fed gets overly hawkish once again, that could create kind of a negative feedback loop sort of dynamic that we saw back, say, in October, November, December at the end of last year. But I don't see how the Fed, I mean, as long as they think that hiking rates is going to push down inflation, I don't see how the Fed gets off the rate hike thing anytime soon. But with that in mind,
one thing that Zero Shot mentioned earlier on this evening was his comment in the chat. Did you notice it was like he thinks they don't misunderstand, but they just lying.
Yeah, very well could be. I mean, very well could be. Yeah, George, so last week I kind of laid out, and earlier in the episode too, I kind of laid out, I mean, I really think a lot of what was happening today is more, without a doubt, we definitely saw kind of a small wave of selling when Powell started talking, but I think this could equally be attributed to, and this is hard. I mean, this is why predicting markets is hard, and understanding, what's actually determining price at over any length of time is difficult to understand. But I would attribute today's selling first and foremost to just we are so overbought in the short run. We've had a hot run post OpEx, kind of a window of opportunity for volatility to pop. To a small extent, maybe this is actually some research I shared recently on one of the updates and went into more detail on one of the Patreon updates. But maybe a little bit of the tax drain hitting right now is knocking things off kilter a little bit. And then certainly, when hedging activity takes place because of Fed rate or Fed just discussion at any, about anything, you can see selling take place. So I think it was a confluence of factors, but all in all, I don't think we were down 0.5% or something when it was all said and done. So certainly nothing too out of the ordinary. But that'll be my last thought on markets today. I'm hitting. No, George, don't apologize for being late, man. That is
okay,
all,
it's all good.
That is all good. That's all good. No worries there. Thanks for joining. Yeah, just thanks for tuning in more than anything else. It keeps these streams fun. Maybe next time I'll hold my caffeine off until 8 p.m. so I can have a full tank of energy to go the full 3 hours. But I got to get myself in bed sooner than later soon. So Bijou, I'm gonna give you the mic and let you go with the outro here.
Oh, okay. Suffering shark eyes, Douglas. Suffering shark eyes, Douglas. Over in central godly Gotham town, the newspaper's been reporting the civilian alter ego of Shark Eye, the debt collector, might be Jerome Powell. Meanwhile, Bond lady Janet Yellen still can't decide whether to put her finger on the scale of justice in favor of the workers or the oligarchs. But does she even realize failing to put the finger on the scale is itself an act of injustice, Douglas? Precarious times ahead for the precariat MMT fans. Over in Dougville, Bijou bot and Douglas retrofitting Bijou's water-cooled cage with rocket sled drives so they can make a quick getaway when Dr. Grotesquerie, aka Larry Summers, comes knocking with the stormtroopers to arrest Douglas and Squire Bijou for illegal possession of the dangerous knowledge of MMT. Will they get the retrofit done in time? Or is it an unjust neoliberal gulag sentence awaiting them in Arkham Penitentiary in the money crankery wing? Well, find out next week, fans. Same MMT time, same MMT channel.
God, these are the best. I love them. I love it. Great outro again. Everyone, have a great night. Thanks for joining us tonight. We'll see y'all again next week. Take care, everybody.
Okay.